because we actually had 10-year yields drop 2 days ago, and then yesterday we had them bounce back in the middle of a sell-off in the stocks. So bonds were selling off even though stocks were selling off. And then if you look at the yield curve, we actually had something interesting happen, which is the 2-year started to actually catch up a little bit. Because right now, over the last couple months, it's been the long end treasury yields leading the way higher. So the yield curve has been expanding back out. Now, it did that back when the regional banks blew up, but it did it from the opposite direction. The 2-year yield went down so fast relative to the 10-year, the yield curve expanded out. That's what happened here. Now, since over the last several months, economic data has been beating expectations. The 10s to 2s have been widening out, as you see, since the low in June, because the 10-year yield has been moving so fast and the 2-year hasn't been able to keep up. Why hasn't the 2-year been able to keep up? Well, because the market really hasn't changed its expectations for the Fed at all. The market hasn't really started to price in any more hikes. It started to price out some of the cuts that were expected. But then the last couple days, what happened is actually the yield curve contracted a bit here because the 2-year started to move up again. And it was easy to miss that with all of the excitement around NVIDIA and focus on that. But it's a big deal because literally just in the last couple days, the market suddenly is starting to think that maybe Powell is going to go a little bit more hawkish. And that's why the 2-year yield probably moved with a good bit of speed here in the last couple days. So we got this little curve flattening here ahead of Jerome Powell because the 2-year yield is now catching up to the long end yields. That probably sets us up for a very interesting discussion today from the Fed chair at an event in which a year ago he promised us lots of pain. Kevin Hinks with me here this morning. We didn't really get too much pain as promised. We got a few pockets of pain, but the employment situation, as we just saw again this week with jobless claims, remains pretty robust. And now the market the last couple of days, it seems like is starting to think, okay, maybe Powell's not done yet.
Well, the reason why, the first question is, what's going to be the word that comes out of this speech? Is it going to be pain? What's the new word for this year? Jerome Powell's going to have to talk about the data, right? And the data has been stronger than normal or moving in a stronger direction. Yeah. He's going to have to talk about wages. And he won't talk about, he'll be a friend of the administration. He won't talk about the fact that all these labor negotiations are moving up wages. He won't say it that way, but he will say wages are still firm and strong. We can connect the dots to all these labor negotiations going on, but I think Jerome Powell is going to have to, he'll stay on point. He's not going to do a mission accomplished banner above his speech. It's going to be on topic. That doesn't mean he might be done raising interest rates to a restrictive level. Can't rule that out, but the fact is he's going to say it's the data, right? The good news is he's got unemployment at 3.5%, right? So therefore he's got one job now, and that is inflation. The lazy interpretation is going to be 3%, close enough, Jerome Powell, 2, 3, anything around 3%, close enough. There's a lot of folks that want him to do that. He will not take that bait. He shows no signs of taking that bait.
And not for lack of trying.
No.
Because, there's always a reporter, and I don't even really get
3. You'll get the 3. You'll be fine, right? Good enough.
I don't really get it. It's kind of bizarre from a journalist standpoint how many times the journalists ask him there, and almost like they're trying to persuade him.
Exactly.
We're like, well, would you stop here? Would you stop here? Nope, 2%. Well, would you stop here? Nope, 2%. But then he did pause, and we are still well above 2%.
Well, hold on, because he does feel, I think, that he's got the ball rolling downhill. No need to push it further, but you're still not to the bottom of the hill yet, right? I think that's what he's got rates, like he said in his one press conference 2 ago. I have rates at restrictive levels now. They haven't been here very long. So I think he feels, if you ask him, that he's got rates at a restrictive level, but it has to keep restricting, right? And so I think, the soft landing, the Goldilocks landing for this economy is still on the table, but he's got to get inflation way closer to 2%. Yeah. The headline, everyone wants to say, well, the headline, people from the administration, the headline's 3. He's not looking at the headline.
To the point about the ball rolling down the hill, though, maybe to push back a little bit there, because our last couple inflation prints,
Yeah.
ball stopped rolling a little bit.
Exactly right.
We kind of got stuck around this 3.5 or so.
Right, and the theory that the ball's rolling down the hill, that's great, but it needs to continue doing that,
Yeah.
and the data is starting to swing up again. Oil prices moving from 70 to 80 or 85, that's not helping overall inflation. You've got some of the numbers starting to tick back up again. I mean, look at this week. Durable goods, right? Take out the volatile airplane purchases that took the number from up big last month to down big this, and ex-transportation was up 0.5%.
Yeah.
Much bigger than expected. So new home sales, right? Existing was a little light, but new home sales were strong. So there's people out there buying new homes at these interest rates, not maybe flipping. So Jerome Powell's got to make a clear, message to what he wants the markets to think. Will they take it well? I'll let you know in about an hour.
All right now we got a lot of pressure in bonds with 2 years trying to make their move up near the high. Another quick thought real fast is that overnight we also got some info that China's trying to shore up their growth.
Yes.
It doesn't seem to be a big market mover even for the Chinese stocks, but it could be another variable that could stoke a little demand if they're going to try and revive their economy more.
They eased some home purchase rules. Remember, a week or so ago, they didn't move the 5-year rate. That's the big housing rate. They moved the 1-year. Markets were really disappointed in that. Now they eased some of the rules for housing. That's a little bit different. Market reacted and then came right back down. So one last thing, Oliver.
Yeah.
Massive week for economic data next week. Massive. Every day, big numbers with payrolls on the first day of the month. That's not normal, but ahead of the holiday weekend, they're putting out payrolls. So we also got GDP. We also got income and outlays next week.
And GDP is yesterday got freshly
5.9 now.
5.9.
Yes.
Dennis Lockhart from the Atlanta Fed, old president to that institution, told us that we need to pay attention. That a lot of people try to ignore that report, and he said don't. He said that we're now halfway through the quarter. So, all right, well, that puts extra pressure on Powell because no matter what he says then, we'll be able to kind of verify it the week after with all the data and see if it was on the right track. So, all right, we still got a little time here. Let's talk some more of the earnings from overnight. Thanks, Kevin Hanks, for the setup there. Renita Young with me, our senior markets correspondent. Let's talk chips again. Marvell's kind of the day 2 follow-on to NVIDIA. Numbers seemed all right, but maybe not enough considering NVIDIA faded. I feel like we're going to be on a little nerves today with Marvell.
I think we are, right? But there is some hope coming from what analysts have to say about this stock. We'll get to that in a minute. But earnings and revenue, they did just beat expectations. However, revenue fell about 12% year over year, and that earnings number was at 33 cents a share, and it was just above the exact estimates. Revenue came in at 1.34 billion, also just above the estimates. And it was the AI revenue growth that the company wanted to come in a lot stronger than what it did. So that's why Marvell is giving all these expectations that Marvell will have stronger AI revenue growth in the fourth quarter. They're expecting the growth to hit $200 million for the fourth quarter alone, and then accelerating from there. We're a couple quarters out from the fourth quarter, and they're already giving those expectations, which means that they want us to believe, But so far, it looks like analysts, they kind of have hope for it to do the same. At least one analyst, KeyBank, said that they believe that Marvell could actually generate more than $500 million in the current quarter in AI-related revenue, and then at least reach $1 billion in the second one. And actually, that's $500 million in AI-related revenue in the fiscal year, not the current quarter. That's what KeyBank is saying. But so far, analysts are holding on to their expectations for this stock. I didn't see any downgrades. I didn't see any price target cuts yet. So far, companies are holding on to their bullish ratings. We did have one outlier, though, that rated this stock a sell.
Okay, so with NVIDIA, too, we didn't really get, look, it's only been, well, we're not even open yet, so it hasn't even been any official trading hours since that stock yesterday closed flat. I wouldn't really expect to see a lot of bearish commentary come out from these earnings because of the price action. That might just be the market's problem because it got too over its skis and bullish in these names and valuations driven up. The numbers aren't bad here, but there's definitely even still a pretty big gap between Marvell and then NVIDIA, because NVIDIA's already delivering these huge numbers, and then Marvell's kind of still promising a little bit. The trailing stuff here, I mean, it's fine to be on the margin a tiny bit, but not exactly in a blowout number.
And I guess the name of the game is, as long as you can promise just enough to have the expectations of analysts continue to stay higher,
right?
Then you're fine until you can actually meet those expectations.
Yeah. Okay. Well, we're down to $55 right now for Marvell, so it is coming off a bit. I'm not surprised to see that. Let's flip it around. Let's talk Workday for a second, the cloud names, because there's actually a bunch of cloud stocks reporting, and there's still many more over the next week. This was a good response at first last night. The numbers looked pretty clean.
They did, and so that's why adjusted earnings revenue came in better than expected for the company, and the AI and machine learning parts of the company did very well this quarter. That's why Workday touted them in their report. So adjusted earnings came in at $1.43 a share, above estimates. Revenue grew 16.3% to $1.79 billion, above estimates. When we look at the 24-month subscriber revenue backlog, it was up 22.7% to $10.27 billion. Total subscription revenue backlog was up 32.5% year over year to $17.85 billion. And the company said more than 3,000 customers are now sharing their data with its machine learning models, and more than 50 million machine learning inferences are processed per day. So here's a company with actual numbers that go behind their efforts that they're pushing through and that they're flaunting during this. The company also said that more generative AI capabilities will be rolling out in the next quarter.
Okay, so they've latched themselves onto this theme as well.
Yeah.
But in the meantime, the employment situation is strong. The general workforce is robust. You know, some of the tech companies went through layoffs last year, but right now we're not seeing any major layoff waves across America. So Workday should be generally just in a good place economically.
And that's why they raised their guidance as well.
That to me seems like it's a little bit more of a grounded report. You know, they're sprinkling in some of the AI stuff and the guidance and the commentary, but right now it's actually a cleaner response to the number 2, and I think that's a little surprising. I don't think people really had kind of the cloud and Workday style companies as the potential winners for this week. So Chip's having a little bit of more trouble though. Thanks, Renita. All right, good look here at the earnings responses. The stocks are generally bid, though. We got futures in the right direction for bulls this morning. Still some time before we hear from the Fed chair. Let's talk about what it means, not just for stocks, but branching out into the crypto world as well. Kevin Kelly joins us from Delphi Digital next. Always a good macro discussion. We'll connect it into some of the risk-on themes. Be right back as stocks still have a little time before the bell. Stick around.
Good morning, August 25th. Welcome. Hope you had a good rest of your evening. Had a good morning so far. Got about 12 minutes to market open. We're going to be streaming stocks, options, and futures trading. Watching the SPY, watching Jerome Powell, Jackson Hole, sorry, and trading some daily options on there with the small account. GNS, BBBYQ, GME, Tupperware. Sub up, like up, comment down. Happy money sticks around. Excuse me. Follow us on Twitter at HappyMoneyYT, as well as Discord. Link for both of those are in the description. But Discord link all in the chat. Two likes on the board for this sleepy Friday so far. Morning, Jake. Bit of a gap up on SPY. Powell comes on at like 10 something, so we'll watch that and trade accordingly. So HE suspended their dividend. So big gap down on that one this morning, 23% down. A little bit playing with fire, this one. Jeez. I think it will be a good pickup, but yeah, just have to find out where it finds support. Got $7 for the low. That's a last major support. So see if it makes it all the way there. AMC is down a little bit. Surprise, surprise. Not as much though. Kind of selling off here into open actually. I was kind of hoping it would find support from yesterday's low. The ape conversion has happened, so no more ape delisted. And the options chain is starting to figure itself out maybe. Still kind of a mess on E-Trade. Morning, Poison. Gap up on GNS, 3.5%. Bour's down 1.9. Yeah, I bet you are, Poison. This is a much bigger move on AMC than a normal reverse split. BFS is up 10% pre-market.
about doing that is going to be, I think, pretty difficult to manage, because on one hand, you could make the argument that if longer dated yields are going to continue to remain high, or at least stay where they are, you could make the argument that we should have, some cuts on the front end, or at least a Fed funds, and bring the 2-year down. Where I get a bit skeptical of that argument, to be quite frank with you, is if you look historically at hike cycles, right, and then the subsequent cuts, rarely do we see this gradual elevator or escalator kind of ride up and then a gradual escalator ride down, right? Usually it's a pretty gradual rise to the top, and then there's something that causes the Fed to have to be reactive. They're certainly more reactive than proactive, causes them to have to be reactive and cut rates pretty aggressively on the front end. And that's where I think the risk lies as we get towards year end, but probably really into the first quarter of next year, and how that manifests, whether it is some type of renewed banking crisis concern or just a general credit crisis, because you're now moving into a period where we have a lot of debt that was issued both on the public side and on the private side and corporates. You have a lot of debt that was issued over the last 2-3 years that is now coming due and rolling, right, at much higher rates. And so there are questions around, what is the balance sheet capacity of the financial system? How much of that can actually be rolled over? And I think we're starting to see some of the cracks in that, where it's not as capital is just more scarce, right? And that's across credit markets, that's across equity markets, that's across early stage venture markets. Capital is becoming more scarce, and so the competition for it is only going to remain more elevated.
Okay, really like that macro description. Let's bring it into your wheelhouse here and the crypto focus. BTC had been hanging out at 30 very consistently. It kind of missed out on the relative performance of stocks. S&P got within 5% of the high. Bitcoin still at its high from this year, 50% off its record. But when stocks started to roll over, Bitcoin was pretty solid, basically up until like mid last week. It started to break a little bit. What's going on?
Yeah, I think the we'll call it maybe more temporary dislocation between Bitcoin and crypto and stocks, I think in part was fundamentally driven, right? The rise up, to your point, where Bitcoin didn't really participate, a lot of that was driven by a stronger growth outlook or a change of expectations, especially when we're talking about big narratives like AI, Nvidia, carrying a lot of that weight. Bitcoin is really, as we've said on this program a number of times, it's really a bet or a hedge on currency debasement, right? So what that requires is when you have periods in which you have dollar strength, for example, that is the exact opposite type of environment in which Bitcoin performs well. So what we've seen somewhat recently, right, we had a pretty sizable sell-off in the dollar from the October, November highs. That was certainly a bullish catalyst for Bitcoin. Then you started to see the dollar kind of rebound or bounce off key technical levels. That became a bit of a headwind for Bitcoin. And the dislocation between the two, I think, actually was fundamentally driven, this time more on the stock side. And then last week, Bitcoin tripped, key technical levels, and it led to a very liquidation-driven sell-off, right? And it happened very, very, very quickly.
All right, so dollar up, not ideal for Bitcoin. What about if we get like rates up and a little economic revival, but without a hawkish Fed? Like, what if the Fed says, hey, inflation's actually coming down, we can stay where we're at, maybe we're not restrictive, maybe we're not stimulative, but maybe we get this economy to keep bouncing. The reason why I described this possibility is because one of the charts from your guys' recent reports ties Bitcoin to ISMs, and I think it's a little bit counterintuitive to what I generally think, which is if the economy does well, then Bitcoin will generally suffer because yields go up, dollar goes up. But maybe there's a scenario where you don't have to have some explosive move as the economy recovers because inflation's not soaring. Is that possible? Take me through this. We've got about 1 minute.
Yeah, 100%. So really what we're tying here is, as you mentioned, Bitcoin's peaks really have coincided with peaks in the ISM, right, or leading indicator of the business cycle.
I updated last night, see if it's
really interesting, though, and my close colleague Ralph Powell's done some fantastic work on this, is when you look at
bad entries and
the
exits
ISM rolling
behind
over
10
means,
seconds.
it means that there's a weaker economic outlook, especially when it breaks below 50, right? What that typically tends to precede is an increase in global liquidity, right? So it's, again, and that's where the currency debasement part of this and the argument
I'm
for
like 2 seconds behind still.
Bitcoin comes in. So the idea
There's the
is
bell.
here that as you see a weakening economy, and we've seen this 2-year
RB's
downtrend
flat.
now in the
SPY is
ISM,
opening
it
up,
gives an indication that
0.4%.
liquidity conditions should follow, if they follow historical trends,
PayPal's at 10.
should
I wouldn't be
get
rushing
better.
into any
We start to see
trades.
this on the margin.
Thought about
later
doing a
this year,
strangle
which
right
is
at
why we
open.
thought risk assets started to sniff this
Today's
out.
probably not the day for that though.
It implies
Maybe
a
next week
better
we'll start
or more
trying that.
robust liquidity outlook, which is net beneficial
Actually,
for
maybe
Bitcoin.
I'll
Got
just
it.
paper trade it.
Nice. All right.
See how it plays
So
out.
I like the chart. I haven't really seen it overlaid
It's an interesting
that way.
one, right?
It's already
Yeah, and
open.
it does kind of go against sort of
Moving.
some of the preconceptions
Right,
that
even
at
though I'm a
least
little late.
I have about where what Bitcoin wants to see necessarily. So if it's dollar up while those PMIs are rebounding and the Fed's got to be aggressive, then maybe not ideal. But so far in history, it's been pretty reliable.
It's not a great example of it because SPY just took
kinda
the
overlay
high.
between the two. Kevin Kelly, great stuff. Thank
You
you
can
very
have
much.
your
I appreciate
order.
the thoughts.
All right, you can have your order in before the market opens. So right at market open, you'll just get filled. Then it'll be a proper strangle. Oh shoot, is this not paper? Oh my gosh, this isn't a paper trade. What in the world? What did I say about stupid mistakes? It flipped over to paper, what happened? Went back. I guess I'm trying it today, not on paper. Here we got a bad entry. I can just get out of this actually. A little bit. Yeah, I'm gonna hop out. Okay, now I'm gonna paper it. That was weird. Share your paper. Simulated. Yes, please. I'll flip over to my real account. Why is it working? Open it. Okay. GNS. GNS ripping. 8%. Do it. BFS also rallying 24%. Affirm. They have earnings maybe? Out of the gate. It's hard to catch these ones if they're going to move right out of the gate. Got to be prepared for it. Gotta already be in it. See what holds. We've got resistance at 131. Barbecue down. See? Sorts of issues. I would maybe dump the call at, I don't know, high of the day or pre-market high. Depends on how long you want to hold these. GNS up 9%. Got it over here. I'm just keeping an eye on barbecue, see what it's doing. 10.5% on GNS. I'm gonna dump the call. That up 6%. Dude, what's up with the lag on the paper trade? Guess you could kind of scale out on both legs. Let's try this. Kind of thing, like if it keeps rallying, then dumped yet. Hit the pre-market high, more or less. The market could be very slow and just choppy until Powell too, so but today's not the best day to do it. 9.5 on GNS. Oh, EBIX is up. Looky, looky, looky. This is up 6%. Is down 1.5. A little above that support, but like I said, I don't like this one as much. I like that engulfing candle. Especially now that GNS has made some confirmation. It's up 11.5. This is the way. Got FUBO up here 4%. A little GME pump too, 2%. Here's up 5. Big move on a firm. That must be earnings. AMC coming up a little bit from the lows. Went down 3.2 now. Holding. Still messed up on the trade. Have to do it in separate legs. Buy coming up some more. Could do is just put a stop on the short side. Break even. Let's do it manually though, because it's confusing. FS 24%, firm 21, and GNS at 12.5. AMC maybe is finding a floor today now that the ape conversion's done. Trying to figure out if I would have made more if I had it opened right at the open contracts. Barbecue down 3.5. Entry BR. It's going down. We'll see what J Powell gives us. You get some pretty big bounces before the big moves to the downside. But yeah, I agree. I think we could see like 440, 50, maybe, at this resistance. But yeah, the safer bet's probably going short, whatever point. Kind of chilling. Whole Jing is getting down. Getting ready for the party. I want to see barbecue hold this, doesn't have to, but this trend would be nice to hold. If not that, at least this horizontal 18 cents, 1870 area. And GNS came down a little bit, still 8%. Up is down 2.5. Guess I should have kept my real strangle going. I think it would have worked. I'll test it out a couple mornings, see how it goes. Not every morning do you have are you able to test a pre-market high that quickly. Let's see. AMC only down 1%. Might flatten out, might go green today. Only has like 500% to go back to where it was. No big deal. 20 Mac run. 33 or lower. I don't want to bring in my bias because this market could always go up too. But yeah, on the more macro, we do definitely have that inverse cup and handle. That engulfing candle supports that with the volume. But if you're too confident, probably wrong. Market loves to humble us. Taking a Teladoc call here, it's been a while. Just for the funsies. I mean, it's at a support. No, it's below the supports. Oh no, I guess there's got one more left. I know, I'm not messing with Teladoc. I'm not messing with really anything long. Even though some small caps might do alright with the market selling off. Because this will just be probably mostly mega caps. But if it gets out of control, like crash like, you're gonna see everything's gonna get the hammer. Oh, I missed that red candle, look at that. Probably should have closed my puts on that one. Yeah, it seems so loud today. Low 300s by October. This is the way. Yeah, I'm down to break the low here. Definitely down if we get it before January. .5% on GME. Might be a nice nice day to get some puts on GME. I think it's gonna break through that 15 level. If it does, I think it could definitely come down quite a bit. We had 6% upside on those calls, and now those puts are up 17%. Might just put a trailing stop on these. I'm gonna wait till low of the day, but leave them. % on GNS, TTOO up 9. Good to see barbecue hanging out. I mean, it'd be nice maybe ripping, but at least it's flattening out. Trading flat, not breaking supports. Peloton's up 5. I kind of bull flag in there, but I think it's going to stay pretty confined to a range today before Powell. Got 15 minutes, 13 minutes till it starts. All right, Bubba. Probably better to wait till J Powell anyways. Unless you're just gonna lotto puts again, then this might be opportunity. Given we are kind of at the pre-market high. But you might get a lot better opportunity depending on what J Powell says. Just in time to scoop. Yep, I figured. Given that we're kind of at the bottom of the channel, or yesterday we were rather. Not too hasty to just throw into puts. Ooh, GNS 12. Get 12% there. %. Barbecue's flat. Me up 3.3. A little bounce here back to some moving averages on GME. 4% on a firm. And fast up 17. What the strangle does help with is the urge to just get into a trade. So sometimes good to have that stuff. I don't feel like I have a problem with it, especially in the morning. Like, I'm patient, but I don't know. We set rules for ourselves. Got nickel up, all the sketchy EVs, Eisen. I mean, it's still Bubba Speed's puts of wisdom. Just pop puts. Yeah, he might not say much. Then that will give the market the green light to continue to sell off. Basically. Oh, I see it at least. This is something bullish. I don't think the market's not going to keep selling off, but I think we could get a rally beforehand. Unless he says something extreme bullish, like we're done. Or we're... I mean, I don't know. Cutting rates. I don't think we'll say anything like that though at this meeting. AMC is even. New high there on GNS. 1295. I don't know when to take profits on GNS. This catalyst coming up. Could be good, could be bad. This may be my first big profits zone probably though. But I wanna hold. I waited so many months for it to get down to this price. Like, yeah, it's been like 4 months. to fill that gap and get to that price finally, so be too quick on jumping out. Give it time to breathe. But having stop loss, or maybe like a trailing stop, or stop loss with some profits, probably the best. GME earnings are 9.6. It'll be below 16.5 by then. I think it might. If the market keeps coming down like we're thinking. Barbecue, just barbacoading around. GNS hit 1.3. Actually, it'd be nice to have another strangle coming into Powell. Might reopen the long leg of it. It's on the paper. Well, I might do that on the real account actually. See, not able to go green. Setting, let's see. What was the prior play? Got 5 minutes. Order on GNS. Barbecue still holding. For the paper account, I might sell this at low of the day. Sell this, the short leg of the strangle puts. There's the low. I'm closing the short. So it was 0.17% of the portfolio of the paper account. Not a huge trade, given it was a very small move this morning. I didn't open it right at open, or how that would affect things. Barbecue down to 2.5. Order GNS up 13.7. 14 there. Good little bounce on liquor. 12.5. It's just totally dumped on the market. 132% to go. Okay. Could see 3 or 4% index drop all day. Wow. You speak into existence, Bubba. Boom, GNS just broke out 20% there. 135 broke that resistance. Very good. Still waiting for them to start this stream. Terminal rate. Terminal rate needs to go. Yeah, we're listening for terminal rate. What's priced in? Or I think the last, is it 5.6? Because it was higher than expected at one point. He was pricing in a higher terminal. So yeah, we'll see if anything higher or lower on that. But he might not say anything about it. So that's kind of the thing. And if he doesn't, then I think the market will continue its descent. Alright, next move up on GNS. If it can hold this as support, distance just broke through that 131 area. I'm looking for 145 came from. You could see how that was kind of a resistance too, how it busted through there. Figured some stops. See if we can get this same uptrend here. I'm in somewhere else. High back to the high of the day.
You to the 2023 Jackson Hole Conference, Structural Shifts in the Global Economy. Chair Powell, the floor is yours.
That was brief.
That was brief. Oh, I started making jokes.
And
That's bullish. If he's lighthearted.
Thank you, Betsy, and good morning, everyone. At last year's Jackson Hole Symposium, I delivered a brief, direct message. My remarks this year will be a bit longer, but the message is the same.
The market?
It is the Fed's job to bring inflation down to our 2% goal, and we will do so.
Whoa.
We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high.
A rip.
We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective. Today, I will review our progress so far and discuss the outlook and the uncertainties we face as we pursue our dual mandate goals. I will conclude with a summary of what this means for policy.
Market's almost up 1%.
Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. The ongoing episode of high inflation initially emerged from a collision between very strong demand and pandemic-constrained supply. By the time the FOMC raised the policy rate in March 2022, it was clear that bringing down inflation would depend on both the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trends. The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We can't yet know the extent to which these lower readings will continue or where underlying inflation will settle over coming quarters. 12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability. To understand the factors that will likely drive further progress, it is useful to separately examine the three broad components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for
strangle might
durable
have
goods,
actually
as
killed
both
it.
tighter monetary
I
policy
had good exits.
and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown, and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well, and we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened, and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54 and by an increase in immigration back toward pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little.
That level,
doing too little
could
allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
I think that's it, yeah. Yeah, no Q&A. Might add to these puts. Not sure there was something specifically bullish that the market was liking, but this all seemed pretty hawkish to me. I don't know. See what happens now that it's over. Wow, man, that strangle would have killed it. All right, well, I don't know for next time. I mean, I almost did right before you went on. I can't remember how much volatility this happened last time. Up and down. I mean, that was even if I had awful timing, you had a great exit on both. Maybe not awful timing, but just pretty bad timing. The premiums are totally juiced. My puts up here are like break even still. So now the premiums are going to start dropping and won't really start gaining back up until you set a trend. Tightening. So it hit, let's see, 441, kind of that other side of that shoulder. Yeah, right here. Got a head and a shoulder. Now 4 more selling. Selling commence. Unless there's keywords, I'll try and keep track on what was said, if there's anything specific that seemed whoa, up it. Back down to VWAP there. Now they're up 60%. That is neat. I don't want to hold them for a bit. Why is this? Oh, this isn't working. Why aren't you working? Whoops. I turn that up. There we go. Oof. Alright, there we go. Cool. Bullish? Hawkish? Hawkish or dovish? Dovish. I think it's still just as hawkish. I mean, he even reaffirmed the 2% terminal, or sorry, 2% interest rates. So didn't confirm what the terminal will be, but he wants inflation at 2% still. So just enough, not too much. Thicker, 20%. Barbecue still holding 1.8, and GNS holding up nice, 13.7, just below that resistance. That's a nice high VWAP though. That's crazy. Yeah, I mean the premiums up here, from here to here, they didn't change They were so juiced up here when he was still talking. Now let's get that 3% move. Okay, Bobalicious. You may proceed. I turn this week into a green week. That'd be neat. Gosh, you and me are the same height. That is neat. About it.
50, and as I take a look at where we are relative to last month's highs and lows, I mean, we've been kind of just trading around this 4,400 level. We're basically right at last month's lows.
All of this the last 3 days, because that bottom right there in the last 3 days, it's gotten kind of volatile. We're above the lows. I'm watching the dollar even more than I am watching stocks right now, frankly. And bonds, I'll watch, but to me, the dollar is where a lot of this all funnels up to, if you will, where greenback goes up. That generally has been risk off, and that's kind of where it all comes to a head as far as the market's interpretation.
That's why look at the dollar's dropping the whole time. That's weird.
Goes higher, then that means we're interpreting this as marginally financially tightening.
Well, if you're watching the dollar, Oliver, stay tuned because we'll hear from Christine Lagarde in just a little bit.
That's right.
And a lot of people are looking more towards comments from the president from the ECB rather than Fed Chair Jerome Powell is the tail, as I like to say, that wags the dog. The dollar being the dog. I mean, we should be really focused on the euro currency and the British pound in that sense.
I'm kind of
even more crazy is why you're sharing that with me.
Wrong move dynamic on these days too, and the first move for the dollar was down, and now it's kind of coming back a little bit. Bonds little changed, as Ben mentioned, the market rallied and faded. Anything in particular you're looking at, Kevin Green, here in the response?
Yeah, I would like to see the dollar fade that 104 level. If it continues to stay at this level, kind of like what Ben was talking about there, it does break that downward channel. And that could be a little bit rough when it comes to the equity markets. And Christine Lagarde can impact that either to the upside or downside when you're looking at the euro. And the euro has such a dramatic impact when it comes to the dollar, around 55 to 60%, or even maybe even more, depending on that weighting. So that's really what we want to keep our eye on. What I would call out right now, just looking at options flow right now here, Oliver, the market really wants to see a move to the upside. A lot of traders are pinpointing 44.50. I'm not sure if they're going to get that. If they stay below 4,400, we still have this negative gamma type of situation, which can create volatility as well. But
ooh, a negative gamma
squeeze. See a lot of call activity stacking up, and put activity is getting there when you're looking at the 43.50 puts.
Break the low of the day.
We are still seeing a lot of strong activity, a lot of flow going into the call side here. Let's see if those traders are going to be right for today.
Okay, so what we kind of got that like pin there, and we got to see if the pin comes loose to get us back below that 43.50 low from last week, which is the top of that gap also on the way up from back in June. So it does seem like an important level for us to try and hold for bulls here. Appreciate it, Kevin Green. Thanks, Ben. Like this time. Good stuff, guys. All right,
I'm going to sell one of these there.
And Christine Lagarde on deck. Market somewhat at ease right now. We've got basis points of change. Russell did go red, so we did lose the Russell there. But NASDAQ hanging on and the S&P 500 hanging on. Let's bring in Pete and Jerry, and co-owner of Market Rebellion, to continue the trading talk here after the speech. So your take, Pete, compared to where we were a year ago, maybe a little bit less aggressive from the Fed chair, but an economy that has softened somewhat. So how does that all shake out for investors?
Is the pain word last year was something I think everybody focused on, right? I mean, that was something that everybody had to brace for. And this go around, he's very resolute. He's talking about exactly what the gentleman before me were talking about as well, which is he seems like he's getting closer to that point where we can back off, but we're not there yet. And until we get there, and he's standing strong. And I never expected him to actually raise that area in terms of that 2% going to 2.5 or 3. I never expected that, but I certainly was looking at just what he was going to say, because we have seen a lot of improvements. We've seen a lot of different things.
This guy looks like he lives in Jackson Hole.
The direction that we are, but he's been very solid about the idea, and he's never wavered. Hey, we're looking at 2%. That's where we're targeting, and whatever it takes, we're going to do it. And I think the one thing that I've said time and time again, transparency has been absolutely unbelievable. He has not wavered at all on that. He's never given us any signs that he's going to change anything other than the fact that, hey, we're at 2%. That's our goal. We're going to continue to move on, and that's the direction we're taking.
You think there's been some implicit hope from market participants that perhaps they would adjust that?
You know, there's probably some out there, but I don't expect that adjustment. I didn't expect that adjustment at all, because he's been very clear. And I think the guys in front of me were talking about some of the things that I think are very important. You look at the dollar over 104, that I think is something that we all should keep our eye on. We've been talking about this for a long time, though, that 2-year and 10-year, the 2-year over 5, the 10-year since August has basically been somewhere north of 4%. And that has certainly given people a lot of room to say, you know what, maybe I'm going to back off of my NASDAQ holdings and I'm going to start to shift capital in another spot. And I think that's been playing out right in front of us. And in August, look at what's happened to the NASDAQ. And I think you look at that, you look at the 10-year going over 4, I think there's a great correlation there of why things are happening the way they are.
Yeah, and we're returning basically to last year's regime in some ways. Obviously, we're coming off some pretty big gains the last 10 months, but unmistakable, that correlation that you talk about. So then does that mean that basically until something drastic changes, the Fed starts talking about really softening up or cuts or something, is the onus here then on the doves or the bulls to kind of prove that there's a reason for the correlation to break? Should that inverse yield stocks correlation hold until proven otherwise?
I think it holds until proven otherwise. I mean, that's the direction that I'm seeing right now. Now, if we start to see the 10-year actually start to pull back even just a little bit, and over time maybe it does, but if that happens, then I think you've got a little bit of a green light again for getting into the NASDAQ. But let's be honest, with many of those names, despite the fact that August has been very rough, and we've been talking about that for a while
down
now,
1.5.
I'll tell you what, the gains from January to that point were still substantial, most of that holding on, giving back some of it, but certainly not giving back all of it, and that's a fact. We just continue to be in a spot right now where I think it's just going to be going back and forth and people staring at that 10-year. I'm one of them, and I'll tell you, the addition of the 2-year over 5% is something as well. So that, we're going to have to see that start to pull back a little bit if we're going to see, I think, the NASDAQ make a move again. All
right. 10 years creeping right now. We got bonds down about 20 bips in the futures, dollar up about the same amount. So to kind of wrap that, because I do want to talk some of the other action the last couple days with you, but to wrap the point, it seems like at this juncture, you don't need to have as aggressive of language from the Fed chair to kind of keep bonds in the motion that they're in and stocks attachment to bonds that way. So even though he's not using pain and stuff like that, that's not a reason for the 10-year to suddenly stop going up.
Right. And he hasn't wavered. I don't expect him to waver, and we might see that 10-year remain sticky for a long period of time. Obviously, that's something that's going to play out when we get into September.
Okay. What about some of the other stuff this week, Pete? I mean, there's been carnage in most of the retail names, apart from like a few brands that were popular when I was in high school, Abercrombie and Urban. Other than that, like, it's just been everything hitting the dust. Obviously, NVIDIA did a face plant after a huge bump. How does that fit into the conversation for traders?
Yeah, I think that should have been somewhat expected. And the only reason I say that with NVIDIA, they crushed it, right? I mean, every single metric you could possibly imagine, they absolutely crushed it. When you look at the earnings and the revenue and the sales and the projections going forward, everything, they hit it out. But the problem was, when you look at the valuation level and the run into earnings, but I mean, especially just going all the way back to January, this run has been spectacular. And it not only had to be perfect, but I think people had to also step back and say, well, what is this valuation looking like now? It's one thing a few years ago to have a valuation level that they had because it was a younger company and they were doing a lot of different things. But right now with this AI, that's huge, of course. We all know that. But we did already know that. And so that was a factor that I think comes into play, and why did it get up to 500 and then suddenly make this big move back down underneath 470? I think it all has to do with where's the valuation now. We were stretched. We were up there somewhere close to a near 70 forward PE. I think that's something that people start to look at, and they start to look at it and say, you know what? I think I can find something else. Maybe there's another NVIDIA type stock out there, but somewhere else where they're going to go, or at least wait for NVIDIA to pull back substantially. We're already seeing some of that, but I think it's going to have to pull back extensively from here for people to start jumping back in. So I don't think it's done getting sold off yet.
And it all, relates, right? Because it's great numbers that they put out. But when you do have bonds offering what they're offering right now, I mean, just naturally there should be limitations to our valuation expansion that we've gotten. I mean, even though the market's less expensive than it was during COVID, like just straight PE basis, you put it next to bonds, it looks pretty darn expensive. And so a stock at 200 times is like kind of out of place.
I totally agree with you. Yeah, I mean, I think it shows the discipline that people are having right now. I don't know that they had the discipline earlier in the year, but I think there's a little bit of discipline out there right now because of the fact that people are willing to say, we love the company. We don't think there's anything wrong with the company. It's just stretched, and I'll wait until I can get a better opportunity to re-enter into this name. And I think that's true of many names out there, including Apple. When you looked at that last quarter, yeah, they missed on the phones, but outside of that, it was a pretty daggone good quarter. Their services were absolutely stupendous. They had records. They had a great number that they put up, but it was getting stretched as well. Apple trading something north of a 30 PE, that's when people start to pull back a little bit.
Pete, is there a possibility here that within this tech downdraft, the push in bond yields, that if there isn't a big resurgence of inflation, can the market rotate? Is that a possibility here for traders to try and take part in the more maybe cyclical stuff that can work with rates higher? Or is this going to be generally broad-based if there is weakness?
No, I think you hit the nail on the head. I think there's always going to be somewhere in the markets that we can always look to, and wherever that might be. I'm still a big bull on energy. I know that it hasn't totally played out just yet, but we had a really nice move since the start of July, and I think we've paused and pulled back a little bit. But nonetheless, I think energy still has plenty of room to the upside from here for the second half, and a lot of that having to do with if China starts to get a little bit better, because obviously some of the numbers from China, were concerning. So people are waiting for that. But as they're waiting for that, I think energy could be one of those spots where people could go. And I look to that as, when you look at how inexpensive some of those names are individually out there, I think that offers some great opportunities, because I do think the second half, especially with OPEC cutting back 2 million barrels, and by July, it turned into a 2 million barrel cutback. I think those are big numbers, big enough numbers to make a difference. And we'll see how things go if China's economy starts to heat up a little bit.
Okay. Great convo, Pete. Glad to have you here this morning. Appreciate it. Great stuff.
Thanks.
Absolutely. Yep. Pete Najarian, co-owner of Market Rebellion, looking for stocks to still stay under some pressure, particularly the tech stuff attached to rates right now, NVIDIA too. And the market is indeed continuing to fade. We're not dealing with a big downside here. We're just talking off the highs. But the NASDAQ was 1% up at one point during Jerome Powell's speech. And so, once again, a hearty fade there of roughly about the same amount, a percentage point almost. The dollar, my go-to, is strong and moving pretty quickly. Greenback seems to have picked a direction, and it's higher. That is likely to be a problem for risk assets, including crypto, which faded too. Bitcoin now flat on the day. Yields finding their way upward. The bond market's selling off again. 10-year treasuries are down 30 bips, taking us to a yield of 4.27. When we come back, we'll take a little bit of a breather from the Fed fallout, talk some earnings ahead of next week. 3 crucial tech companies will try and save the day: Salesforce, CrowdStrike, and Broadcom. We'll be right back with the charts.
Nice. Well done, Lucas. Well done, sir. You guys back to 1-1? Not necessarily. I wouldn't think so. Yeah, that's good. Scale out. Hold some, flip some. Nothing wrong with that. Yeah. Way better than what you would have lost on AMC. Yeah, I mean, no one can answer that for you, you know? So it's good you do it. Position sizing is different. Percent of portfolio, income, stress levels, like, it all has to weigh into decisions. You had a pretty large position. That is relative, though. I don't know your net worth or anything, but seemingly pretty large, so it makes sense to scale out some. Market may be finding a temporary bottom there. %40 on liquor. Have you ever heard me so unenthused about 40%? Liquor up 40%. Still holding 80% of my puts. I'll look to reload potentially to get a setup for it. I don't know if we'll make it all the way back to BWAP before I will, but maybe it's coming right here actually. Not prepared. I got some more. Excuse me. GME up 2%. GNS up 12.3. Came back below that resistance. Holding up around VWAP. Bad. Barbecue 21 cents down 1.4. Which I am totally fine with. AMC kind of flat. Flat. New low of the day there on SPY. So I'll probably close some more at low of yesterday. I guess we're actually past low of yesterday. Yeah, not extended hours. We did break through yesterday's low. Not sure where these dark blue lines came from. I went from green to red. Wow, broke through the low of after hours yesterday. Crazy. Continuing. Yeah, our next level down. Our next level is the low of the cup. Wow, we might hit that today. We've got a little shoulder level coming up here. Inverse shoulder. 435.9. Contracts. Not bad. Taking back gains from one of the losses. Close one here. Closing one's deeper in the money. One try and trick me. Is this the shoulder? I wonder if my son put these lines in here. I bet he did. I should ask him. I should have him use different colored lines. That'd be awesome. We start to see where he charts. I'll do that. I told him, I was like, oh, because he wasn't seeing my lines, and then something changed, and now he can see my lines. I'm like, oh, I better start on some better lines. Look at that, breaking through that shoulder a little bit. Oh, that's from back there. Nice, Bubba. Morning, Tasty. I don't know, keeps projecting view up on GNS. Too low there on SPY. It might be regional all the way. $433. GME doesn't really care yet. Close one more of these. Of a stop. Put a break-even stop on these ones I picked up on that little double dip. These ones are only up a little bit. The other ones were 280%. It looks like it wants to do it. We're gonna get back any gains today. Looks to reload again. See if we get a bigger pullback this time. Pretty stretched from VWAP at this point. Yeah, I'm gonna close my GNS. I'm with you on that one. Now that I've closed, now I think it can hit 1-1 again. ABNT down 4.8. AMC down 2.5. Up 2. Yeah, break on this support. Well, I don't know. It's kind of holding up VWAP. Well, I guess once I started to break this would probably been a better exit. Kind of where you exit poison. Kind of build this level. Might have to consolidating here. Not the best though, since it's below that resistance. But it's fine as long as it holds up. And then once it broke that, that would have been a good exit back to VWAP. So yeah, I like your timing on that. That being said, of course, you could always shoot back up now. Be a bigger pullback. Why not? Not getting a bounce yet. And it just hit the low here, this line we have. Was that low of 821. Right on it. Even get some calls to hedge for the bounce. That's an interesting thought. Just trailing stop. Nice. Yeah, that's one way to do it. Oh, you had a pretty tight stop. Sold at 132. Very small, very tight stop. It hit 135. But no, that's good if you want to take the risk off. Well played. You ended up getting a very much higher. I thought you were looking at TA. Trailing stops are nice though, you just don't even have to think about it. Until it stops you out and then it rips. Like, no. The longest I've ever had a mucus or a cough. Market's just melting still. Yeah, it's below that level now. Wow. GNS come down a little bit. It's up 8% still. Gap you're seeing on GNS. I see a gap at 63. All right here today. Yeah, true. Did gap up. Get a fill. Yeah, there is a gap there. Did gap up a little bit today. Made the gap.
0.25%. Checking out those futures products on this Friday morning. Here's a look. Dollar right now, 104. Dollar gaining ground. We haven't seen 104 in a long time. That's up 1/3 of 1%. Gold futures down $15, almost at $19.32 a troy ounce. Oil $79.92. So still just below that $80 mark. It is gaining 1.1%, and Bitcoin still in that 25,000 range, 25,970. It has been a tough go for Bitcoin. So for a look at the top story here, Jenny Horn, markets correspondent, taking a look. Schwab Network, Jay Powell spoke today. This was a much anticipated speech. This was the economic symposium. And last year we got pummeled after that. Today, a different story.
Is it?
Right, Nicole, and it feels like this speech, though, was oddly, eerily similar to what we did see last year when he did warn of more pain.
Not been one green candle since he ended on the 5-minute. Look at that.
Cratering here, not necessarily
you literally have
dumping like
only
we saw
red
last
5-minute
year,
candles.
But again, sentiment was pretty similar.
How
He did say we are navigating by these stars under cloudy skies,
40 minutes.
which I thought was a great line, but gave no signs that he's even considering another rate cut after the series of 11 interest rate hikes, and the Fed's target range, of course, remaining at its highest level in more than 22 years. But we did see he mentioned progress has been made. They're still comfortable with our current path and the current levels of inflation, and they remain committed to achieving and sustaining a stance of monetary policy that does bring inflation down over time.
Still melting.
They do see this current stance as restrictive, putting downward pressure on economic activity, hiring, as well as inflation. And they highlighted that job openings have declined without increasing employment, which is a historically unusual result that is reflecting this large additional demand for labor, but mentioned that these risks are two-sided. Doing too little could allow above target inflation
we might not
to
get
become
a
entrenched
much
and
of a
require
pullback before we hit a low. I'm not sure.
Bring
It's
more
crazy.
persistent inflation and economy at a high cost to employment, and doing too much could also harm the overall economy. So, well, he did mention that we've seen really nice figures for June and July as far as the economic data points. It doesn't necessarily seem like this was obviously the result the market wanted here, as we are seeing markets pricing in another rate hike for that September FOMC meeting. 50-50 chance though for November. So sort of a wait and see results, but we are definitely seeing some selling.
Yeah, I cut
today.
my ones that were up that much.
Yeah, understood. Jenny Horn, thank you.
Other ones are like
there.
60%
All things
now,
Fed
ones
this
I
morning.
reopened.
Appreciate it. Let's get some insights in the
I
news
might
shaping the markets, and
close
for that we
one
welcome
of
in
them.
Frank Capillari, founder and president at Cap Thesis. What are your thoughts after we heard from Jay Powell?
Crazy,
thanks so much for having me. Well,
no green candles in
S&P
40 minutes.
This big topping pattern. It's pretty clear to anyone who follows the market closely. And in fact, if you look in a technical analysis textbook and the head and shoulders pattern, that's it right there. So the concern is really clear because underneath the most recent low, there's an air pocket of very light support. And so, when that type of thing happens, it can trigger stops, it can trigger a lot of momentum selling, and really a measured move from the top will get you all the way down to almost 4,050, which would be 12% from the high. And that's pretty substantial, right? So that will be the biggest correction we've had really since last August to September. So the question is, do we have the break And if so, how aggressive will it be? Well,
just like that, GNS rip back up the VWAP.
Topping pattern we've seen on a
it could just be need a further pullback.
Beginning of the year. So if you look at that pattern there, for really from the beginning of
you have little head and shoulders on the 5 minute.
December 2022 to the March lows,
bad exit.
There was a similar looking pattern in terms of height, in terms of length. Difference, of course, was that we're coming out of the regional bank crisis there. Sentiment was pretty bad. Right now, I would argue that we're not really at extreme greed as we were back then, but really not extreme bearishness either. So the point is this: we have to respect any downside break that we can. We be vigilant to see any more the next bounce happens, because this is what This is
1%, yeah, that's pretty tight.
You have a downside break, it bounces, then it fails at that break.
I mean, when the stock is moving,
down point,
doing stuff like this, jumping like 4% with one candle.
Understood.
Well, that's a good way to get out if you're just trying to get out.
Now, when you look historically and you go back from 1978
and when it's
through last
so
year, the
ripping so aggressively,
the symposium
those are not big pullbacks when you're
to the upside,
hold it,
about 1/3 of 1%. I mean, do you feel
I don't know if I'd
like
ever
we
do
got
1%
a lot
though.
of what
I don't
we
stock like
expected?
this.
I mean, the markets certainly don't seem
moves so
shocked here
big.
today.
Right. I think that the message is still the same.
I don't use trailing stops that much, so I don't know.
Of,
You're probably more familiar than I am.
To be aggressive or not, and I like to look at really what the 10-year yield is doing.
A little bounce here on this
buy. The 10-year yield continues to move higher. Now, we have this past where it's all about what the pullbacks do on any asset class. And so right now, the pullbacks in the yield have been shallower than what we've seen before. So, for instance, if the 10-year yield continues to go higher, that's an indication that there's still inflationary pressure, and I think the Fed will react accordingly. And we saw that really in delayed fashion from 2021 to 22 to 23, right? Where the Fed took its time raising rates and had to catch up to what the 10-year yield was doing all along. So data dependent, but I really think it's more price dependent on the 10-year yield.
Right, understood. I wanted to go over some of the things you're watching. You had the S&P, you mentioned that. You're watching semiconductors. Your thoughts there? Of course, we just came off the big NVIDIA print. Do you like the group overall? I mean, what's your advice for investors at this point?
Well, I don't like the pattern that's shaping
up
for the S&H. And again, no surprises. It looks very similar to what the S&P 500 is showing. It's really across the board in terms of large cap ETFs, where the same type of thing has happened, where you had extension, rollover, and the most recent bounce over the last week has produced a lower high. Put that all together, again, topping pattern. So for the SMH in particular, you can see that those mid 140 area zone has a confluence of support lines, right? So if those are taken out, that flips to resistance. And again, the same concern with no near-term support to key off of, that could cause some sort of momentum shift, or I said enhanced downside momentum if and when that is when it's broken. So we can see how critical probably into the next week's going to be.
Pretty aggressive bounce around SPY.
Right, understood. Tell me about some of the other things that you're watching.
I'm making stop out and get on actually.
At 104 today.
I almost closed one down there,
I found that
but
very interesting. I'm sure you did too. What do you think about how do you interpret that, and what does it mean for stocks too?
Well, I think the dollar is
arguably even more out on those other ones
than what yields are doing, because you can see that's really moved inversely to what S&P has done. So this is now potentially the 6th straight up week, right? And the 3rd time we've had a multi-week rally.
The call hedge would have been kind of cool.
During those
set up a strangle
the S&P has done
at the bottom there.
Previous two, of course, all failed after.
I want to use more buying power though.
And the market is
the thing
better.
with those.
Now we're at a point where it should, quote unquote, fail again if this downtrend is going to still be intact. And really, for the most part of this year, and toward the end of last year, that is what's been happening. And that has really given the S&P the ability to take advantage of bullish patterns and have an uptrend. Now, the reverse is if this big move, this 6-week uptrend or a consecutive move ends, but we have a shallow pullback and then a breakout again, of course, that's going to put pressure on. So it really ties all together. The S&P is not going to be
just got high enough for my stop.
Without the dollar cooperating.
Might be getting back in even.
Of course, is driving it here. If we see that continuing to move higher, then I think that there's a good chance the S&P breaks down and starts hitting some downside targets.
Yeah. How about oil? As oil pulls back under $80, I know we have 10-year bond yields. They're sort of steady right now, but of course at the highest levels that we've seen since 2007. But what else jumps out at you? Is oil an important story too? And would you invest in that group?
Up, down 6.
I think oil is a bullish story continuously. And now we have We don't have
right
it
on
there,
that support.
but
Needs to
looking at
hold.
this bullish pattern develop.
Final
over the last
support.
number of months, it just came off a 7
I might be reaching for
advance.
VWAP.
So, pull back most recently, but I think that sets up for the next up leg. Now, another way of looking at this is that there's concept in technical analysis called the golden cross. I'm sure people are familiar with, is when the 50-day moving average crosses over the 200. Right now, sometimes that provides whipsaws because you have to have a good amount of positive action just to get to that point. But there are indications where a long-term downtrend can then morph into a long-term uptrend part of that process. And I would point to the most recent time that occurred, which was September 2020. Now, we came off an extreme low, right, when negative during COVID. So a lot had to happen to get even to that point over those few months. But we know what happened after September 2020. It rallied for a good amount of time, all the way, for over a year or so. And we had a good amount of upside. So I'm looking at the bullish pattern in crude oil, which is bullish, of course, instructive. And I'm looking at this potential golden cross as two reasons to believe that we could have further upside in oil.
All right. Thank you so much, Frank Capillari. It's great to see you. Really appreciate it here on, I'll call it Fed Day.
Bounce.
Jackson Hole Symposium Day.
Pretty aggressive bounce.
Thank you very much. Good to see you. Really appreciate it. All right. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals.
Lichtenstein
takes us through the trades for Netflix, Verizon, and Microsoft next on Trading 360.
Kind of a little inverse head and shoulders setting up here. Head, shoulder, shoulder here. Because we're getting close to VWAP, so I grab it if we go drop a little bit. We'll pull back on this uptrend now. It's blasted. Blasty blast. No, not getting it. No entry yet. Liking the volatility today, though. Nice clean price action. No chop yet. Not a whole lot of opportunities for entry, but still nice. A lot of movement, a lot of volatility. Green to red to green now. Maybe I have time for one more trade before it's slowing down and we chop middle of the day. We get something set up here. We get pulled back to VWAP. To that 50 moving average. Or we sell back off to low of the day. GNS back up to VWAP. GME up VWAP 2.6. Even look for the retrace. Looking for it. You're getting engulfing on the 5-minute. That's above VWAP now. Alright, back in some puts. Getting close to the middle of the day though, where we might just start to get choppy, chop. Nice to see one more move. Oh, what do we have here? I have an inverse cup. Bounce here, which would be the handle on the smaller time frame here. A little liquidity grab before make this larger inverse cup here. Yeah, we never made it down to that low, which it wants to. Maybe. GNS 15%. Look at you. Coming down a little bit there. 2.5 minutes on this candle. GNS giving me the unloyal slap. Disloyal. I don't know what's gonna happen with this dividend though. I don't know how that's gonna affect the stock. On that. Back to the resistance, 131 on GNS. Of those contracts and put a stop on it. Probably close one at low of the day. Hey, GME was gonna get a bounce, man. Way oversold. Not way oversold, it's way stretched from its moving averages. Let it get back up to 17, maybe. Just trade sideways for a bit. Doesn't mean 15 and a half are still off the table. Just look at a green candle and think I missed the bottom. Nice, Kevin. Well done, man. Roni's super held down. On FOMO to 428. I don't even know what you're saying. But yeah, that's pretty bearish. If didn't even make it to VWAP. That's true. That part I get. All about to get stopped. I want to add some even. Added one more. A bouncy bounce. See if barbecue wakes up today. Making higher lows, higher highs. It's in an uptrend. It is a Friday. It does like to pump on Fridays at times. Nice, Jay. Well done, man. Yeah, there's a couple great days of trading this week that I just squandered. I didn't even squander it. Two of them were, big problem was the phone call. Missing exits, missing entries. I like to use excuses, but it really was like I couldn't focus. And then a couple of just errors on my part. And then I didn't have a good entry. Yesterday I just never found a good entry. Could have. Today's so far the smallest range, but worked the best for me. Talking about GNS poison. Yeah. If I can not be an idiot today and not try and make back my losses from this week, then I'll be happy with a nice little green Friday to close it out. We're in a bit of a chop here. I'm gonna stop on all three of these now. And I'm out. Stopped out. That's fine. All right, time to chill. I might be waiting hours for the next setup. Or it might happen right now. Still could go long here. Active flip bullish. We got green over the 9. VWAP's pretty low, which sucks, but you know, high of the day and 50 moving average, those are all higher. Opportunity. That's why I'm glad I stopped. That was something I was missing some this week. For some reason I wasn't setting stops. I just wanted to manually time it, which is kind of dumb. Not manually time it, but just look at the chart and say, oh, I want to close here. But it's kind of hard with options because it's not like a price on the chart. You don't know what the contract will be at that price. So if you're not like up on the contract, like then it's easy. I'll just break even, stop, whatever. That's why actually that was maybe giving me more success when I was doing I was just doing 10%, give myself 10% headroom for the stop. Probably a good way to do it, unless if I know the exact, closer to the exact price of where I would want it to stop. There's been that VWAP cross where they look at EMA. Right here. Yeah, I mean, the double top would have been a nice entry. Again, this happened so fast. I was in calls and I actually did pretty well on this bounce. And then I reloaded. Excuse me, I reloaded too quick. I was making a little handle and then it just flushed through. And this was the problem without having to stop. I would have been stopped out. My emotions would have been reset. I wouldn't have any position, and I could have just seen it clearly for what it was. I got some calls there. Sit on them. It's probably going to be choppy for the next hours. Yeah, so if I had to stop there, then it would have been like, okay, see clearly, market just broke the low of the day without any nice entry. Really, I mean, that would have been the best entry, if not the double top. Breaking the low of the day. Breaking VWAP isn't like entry or exit for me. Like, once it gets to VWAP, it likes to dance around like it's starting to do now. Sometimes it'll break it and come back down. But if that trade works for you, then it's, you know, it's like you know, it's different for all of us. GNS break that resistance 131. I'm gonna put a stop on these. I'll give myself a little headroom since that is into the chop hours. I have to do math and stuff. VWAP on SPY. This song just plays louder. See what happens up here at 50 moving average. See if we make it past VWAP with any kind of strength. Yeah, there's a little pop there. Hey, Poppy. VWAP. Close one there. Missed my exit. Yeah, when you miss your exit, you have to drive like 12 more miles. Well, this is worse. Now I can change this stop. That's what I do. Now I change this stop to break even, so then I'm blocked. This is the way. That trade guarantees profits, and it'll be more if it doesn't hit my stop, but even if it hits my stop, I'm holding. Well. Fast up 21%. Look at that. That beautiful chart. What's going on here? I stop like. Why? Also, like doing all this on a brokerage I've just been starting to use much more accurately. Don't really quite understand it. Thanks for your thumbs up, Kevin. Got 17 today. I appreciate all of you guys. Dream. $150K, 434, 436 came in. Not a lot for SPY though. Fair value gap. I don't see any gaps on SPY. They're all filled. $435, that's true. Nice call. That's awesome. BlackBerry's halted? Yes. I don't know why I'm stoked for that. What is happening with BlackBerry? Something's happening. Why climbing up more? 0.3 million volume on that candle. That's huge for BlackBerry. Hopefully it makes barbecue rip for some reason. GNS back to VWAP. Barbecue 2101. I like it. Nice, Jack. Jack be nimble. Jack be quick. Jack bought calls on that long wick. $330, that's crazy. I didn't even make that on this drop. Here. I didn't hold, I guess I held to like here. That is neat. Market's still giving us some price action. This is nice. 11:30, 10 minutes from EU close, 11:40. Not making us get chopped around yet. Very clean.
A lot. This is the most dominating of the three. In fact, the cell tower sector is the largest of all of the REIT sectors, and that sector has really sold off quite a bit. One of your previous guests was talking about Verizon and some of the carriers there, and we believe that the cell tower sector is really going to rebound significantly. There's tremendous demand. That's what's powering our whole data center our whole technology sector. And obviously, kind of touching on data centers, we like that space as well. We believe companies like Digital Realty, for example, are going to continue to perform well in this environment. And really, that's being powered by this AI that we're seeing right now, all the demand. And remember, Nicole, it's the data center REITs that serve as the infrastructure. That's the mission critical infrastructure that powers AI. Even this call that we're on today, or this show, everything is run through data centers. So there's a lot of ways to invest in REITs: cell towers, data centers, some retail, manufactured housing, apartments is another great sector. So again, we look broadly across all those sectors and really try to place capital along those spaces where we're going to see that growth continuing. Rental growth is the key, because when rents grow, dividends are going to grow. And that's really what we're looking for, is companies that are able to sustain and grow their dividends over time.
And look, I mean, that was a great summation, because you talked about all the different types of REITs, right? It's not just what we think of originally, and that's why you have this book, REITs for Dummies, very informative. And I was looking up some of these names. For example, Digital Realty, right? That one I have right here. 1 year, it's up just fractionally, but year to date up 25%. But a name like Realty Income has been hit, right? That's down 20%. American Tower. Kim Forrest is coming up from Boca. She has always talked about some of those cell towers, and that's down over 30% in the 1 year. So that is, something that is here to stay. So an interesting story. Thank you so much, Brad Thomas. Great to speak with you. Appreciate it. Wide Moat Research. All right, coming up next, the disruptors. Multiple analysts have raised Zscaler's price target. George Sillis will explain why, and he'll have an example trade for us. That's next, coming up.
You could think getting commission-free trades is as good as it gets.
Yeah, I don't know. Sorry guys, I stepped away. BlackBerry's up 9.8. I don't know why it got halted or anything. Let's see. Veritas. Consider takeover offer for BlackBerry. There it is. Interesting. I don't know a price or anything like that. You go barbecue. Barbecue's up 2%. Chopping around. I understand why strictly day traders just trade in the first like 2 hours, then the evening, the afternoon. Doesn't always work like this. Sometimes you have like an hour where it just kind of consolidates or chops and then it makes its move, but more often when you have that morning volume, you get a lot of the move then, and just avoiding all like the midday or low volume algos, just fighting it out. GNS 1.3 at 15 still. Got shaken out of that one. See if barbecue can break this next resistance. Back to VWAP. Thanks, J-Huff. Appreciate it, man. Glad to hear. Shut up. Friday's halted down. Oh my god. Dude. How? Why? The world. Another barbecue. How could it be so poorly run? $22 billion a year. I know. How are you filing Chapter 11? The world. Literally $22 billion a year in revenue. Bankruptcy. Barbecue was doing like 5. Both of them are losing money, but come on. Like, what? Reddit prepares. That was 3 minutes ago. Huh. That is insane. That a legit source? Wall Street Journal? And Zynga? Wall Street Journal says. What a joke, man. I want to grab more. Just a stupid rumor or something. Just because these opioid lawsuits? Is that bad? Maybe just Chapter 11 to get out of the lawsuits? I don't know. That's not good. Don't be a cop-out, right, Aid? Bounce on it. We get halted up. You can't make... I'm bad at those lawsuits, man. Can't make $22 billion a year work. You get in a different line of work, I think. Well, that might be a nice little squeeze opportunity. Gonna be news next week about it not, and then this, and then that. Come on. Guess I'll close these rad calls. Oh, man. Yeah, no, it'll have a nice volatility probably. I don't know if I'd be jumping in yet to grab it, but yeah, there's gonna be some trades in there for sure. We were doing I was in the theta farm, so I'm not playing the theta farm with that anymore though. I suppose I could, but I tried that with barbecue. And it maybe ended up working out in the end, but I sat on that capital for like 6 months with no end in sight, and barbecue actually had a nice bounce. Well, no, that wasn't when it said bankruptcy. That was once it, yeah, I don't even think I'm gonna be able to get out. So anyways, yeah, it might be good volatility though, for sure. Good trades to be had. Yeah, I think GME is going to keep coming down. But yeah, you might get news through this weekend, and that's insane. Yeah. Well, see if it comes to fruition. There's just an article from Wall Street Journal, which I don't know. Probably true, but we'll see.
Sales a little bit. I think that was well over, maybe not long overdue, but at least in terms of kind of some of that frothy sentiment that we were talking about, back in July. Tom, Kevin, if you guys remember, we were talking about some of the option action that we had seen, a lot of that upside call skew, people buying stock and buying calls, trying to double dip a little bit. And we kind of pointed that out as, hey, that might be getting into a little bit of that frothy sentiment. That's really started to roll over. Look at something like the equity put call premium at the SIBO releases, and that had gotten down to about a 0.45 in July, which is very, very seasonally low. And now it creeped back up over 1 at the beginning of this week before kind of pulling back a little bit. So you're starting to see people kind of rotate out of those kind of upside call bias, maybe a little bit more hedging. You're seeing starting to occur. You've really started to see that on the institutional side with the SPX options. That skew is back. That put skew is back. So I think that you're starting to see people kind of maybe position for a little bit of more choppiness and maybe a bit of a downturn. I think seasonally, August and September tend to be a bit more volatile months, so people are just preparing for that. And given the fact we've already seen a 5% pullback, remember it's still a longer term bullish market. I think this is healthy. It's a correction, and I think if I would love to see us get back up above 44.50 to kind of feel good about the prospects of the bull market going forward through the fall. But that seems to be kind of an area of some pretty decent resistance right now. Yeah, and it seems, Joe, to your point, S&P 500, NASDAQ 100, Dow Jones Industrial Average now is that resistance at these 50-day moving averages that we've broken down through to the downside here. Yeah, no, absolutely. And I think the other thing I would add to that, too, is just that breadth has really weakened. I think at the beginning of the month, we were up around 70% of the S&P 500 was above their 50-day moving average. It's right around 30% now. Yeah, we're actually starting to get to an area where I think at the beginning of the week, what you saw was maybe a little bit of an oversold bounce. RSI had gotten down to around 32, 33. We're back up around 40 now. So it's just a matter of how long this will last. I would like to see, if we are starting to talk about maybe a capitulation point, I think we probably have a few more percentage points to head down before we start talking about that. Otherwise, if this is just some consolidation within that longer term bull trend, bull market, then chopping around these areas for a while could be the story going forward as we head into the fall.
Yeah, a little consolidation, which we mentioned a few weeks ago, to maybe a pullback that we've seen already, and some consolidation might help the continuation of the bull market. All right, guys, let's take a quick break here. When we come back, we're going to take a look at Meta Platforms. The social media leader is up over 135% so far this year and continues to take advantage of a robust ad market. Fast Market's coming right back.
Single digit down. I think GME could hit single digits, yeah. Just one support at a time though, right? Gotta hit 15, then 10. If it breaks through this 15, then 10's probably on the table. Depends on what the market's doing. But yeah, in a pretty big market sell-off, I think you could see 10, and 10 is so close to single digits, you might hit it. If we have like capitulation in the market, maybe you'd see like gap fills down here, like this $4, $4.50 gap fill and stuff. Or just extremely bad news out of GME, like of course if Ryan Cohen resigns or something, you'd see gap fill. I can't believe Rite Aid, man. Barbecue is like crazy enough with their... What the heck? That's why the argument with barbecue is stupid. Oh, they make $4 billion a year. They can still go bankrupt. I thought Rad was little more cushioned. Well, we'll see. Nothing's done yet, but they're $22 billion a year. Oh my gosh. Need some new people running these businesses, I think. Need some new CEOs out there. Spy more downside? Possibly. We're in the middle of the day and we're chopping directly between the range, so yeah, it's potential. Not a straightforward answer, because I don't have one. VinFast 47% there. Should have just invested in the Chinese EV. What were we thinking all along? Black, this isn't even is a SPAC? I don't even have a website. the SPAC acquisition company. I guess because it's Chinese. 45%. Look at that. Beautiful candle. Easy. Easy money, man. 600%. Ah. 100% in like 5 days? On equity? Problem with trying to pick a direction when SPY's in the middle of the day chopping in the middle of the range is you come up, you come down, just if there's chop until you break levels, you have to be very careful. So yes, sure, hindsight you say, oh, I could have shorted here, could have closed and gone long. Yeah. Nothing really set up here. Yeah, you're building an inverse head and shoulders here, but you have to break the neckline. And now you're kind of getting close to this high, so before you break that neckline, it might come down. You also have a little head and shoulders here. But this is kind of getting canceled out with that, so. I want to see it break basically above this resistance, kind of this area, and then set up some sort of bullish formation, retesting that as a support. The downside, same thing, I'm going to break below this level and then retest that with some bearish formation, and then I could see a nice little trade down to the low of the day. This one, nice little trade maybe the high of the day. Alright, it's still coming down 36%. Well, give me up 2.7. Barbecue 1.4.
Two different directions. Excuse me. Short term, long term. I think short term, kind of given some of the price action that we've seen, the fact that it has come down $50 from its high, the fact that the Nasdaq as a whole has faced some challenges, the last month, and I think a lot of that is the interest rate sensitivity.
Yeah, I wonder if Zip has a position on AMC.
Has given potential opportunities for
because it has a high enough market cap, you can have a position and not be going against his disclaimer.
If you look at the trade that we're going to hit,
yeah, we'll see guts. I mean, just because they're preparing,
really
like, that's just
kind of a trade that looks at.
There's no legal wordage there. Like preparing, they could always be preparing. I could just be doing paperwork, be doing some accounting work that happens this time of year. You know, it's like they could be reaching pretty far with that. So,
and we look at them as a longer term, couple weeks versus a couple months. This one's really only about a 2-week trade. So I think that what I'm looking for in this example is some, maybe a little bit continued weakness.
Yeah, see, slowing it's
the Nasdaq has
falling
some
today
weakness
at
over the
least.
last couple weeks. A little bit continued weakness, but then at some point, maybe some buyers starting to step back in. And for people who might be looking at this as an opportunity to maybe hedge a bit of their long-term portfolio as a way to kind of soften that blow a little bit if they own the shares and it's been pulling back, gives you an opportunity to maybe take some of that risk off the table and cushion that downside with this calendar.
All right, yeah, let's break down this example trade Joe's bringing us here today. Going out to the September 15th, the monthly option cycle.
Take a short here at this double top.
Strike put, and then selling the September 1st weekly options on that same strike to 267.5. That expires in 7 days.
You have an inverse head and shoulders.
Roughly, we've got a $3 debit on it. The stock has moved up a little bit. It's probably trading closer to 280.
You might have a little trade down to
But if you pay a $3 debit for this, there's your risk, $300 per spread. But Kevin, when you look at this type of strategy, yeah, he's picking the 267.5 strike. But at the same time, you've got a
waiting for a better setup,
just below 280 and about 257 for this stock to trade in over the next 3 weeks, where it's still going to be profitable. And that 100-day moving average is right near that 267.5 strike.
bearish trade, you're short 7 deltas, long Vega. So if the stock moves down, you do get that double kick of possibly some implied volatility potentially going up. And you're collecting about $8.50 a day in theta, which allows you to be patient. And because Joe's done a 2-week spread, September 15th, September 1st, you get that one extending of duration there where you can chip away at that debit. Remember, you chip away at the debit, you also chip away at the break-even price. So a lot of positive things if you think that Meta could drift lower, that this trade sets up extremely well for that scenario.
Yeah, and Joe, when you look at these, you tend to look at calendars, or people do, when implied volatility is lower, right? We're seeing implied vol levels, relatively stable, but it costs you less when implied volatility is low because this is a long Vega trade. When you look at something like this, do you get the double bonus here where if Meta continues to grind lower, we might see implied volatility expand, and that can expand the price of this calendar also?
Yes, I absolutely look at that as a bonus, and I think that using the VIX as an indicator, the VIX seems to be trading in a new range now. Even though it's pulled back a little bit today, it's down to 1620 or so. That 16 has been a floor now for the last couple of weeks. That 16 all the way up to about 1880, where that 200-day moving average is in the VIX. Now, I realize implied volatility is specific for this individual name, but if the idea is that this grind is going to continue in the market, this kind of push down in the market, I think this trade could set up well for that. Now, the other thing I would add to that is this: with the calendar, you have flexibility. We always talk about rolling that strike. But what if you did something like this? What if we got down to that level and you said, hey, at this point, I might be a little bit more bullish? Then you could maybe sell the 270 puts, sell the 272.5 puts, or something like that to actually turn this into a bit of a bullish trade. Now that you're already long that 267.5 put. So it gives you some flexibility should the market start to bounce if we get down to those levels.
And one last micro trade thing here. On a day where the VIX is down, calendars are cheaper than they were if the VIX were a point higher. So a day where you see implied volatility down, VIX overall down, good day to look at calendars.
Yeah, we always talk about the flexibility, and Joe mentioned that too, with the potential trade management or rolls that you can do if the market's open, liquidity is provided. You can do some different things here to offset some of your risks on that one. All right, that's a good look at the downside calendar, slight downside calendar with a nice wide range there in Meta Platforms. Thanks to Joe Mazzola for joining us also. But we're going to take a quick break here. When we come back, we're going to be joined by Landon Swan from Likebolio for discussion on Tesla. EV makers had a good year so far in 2023 after a downbeat 2022. We'll look at the data when we get back.
Look at Carvana, how it holds up. Crazy. Carvani. What did Phil? I got one on buying power, but I got one AI put. We'll get more buying power increases somehow, some way, hopefully. I got AI January. Out of the money, it's a little bit of a YOLO. Not a YOLO, but want the leverage. A little higher here on SPY. Starting to break that neckline a little bit. 1230. This Windows update kind of annoying with Edge. It like puts a window around everything. I can maybe change that, but like puts like a border around your browser. See if I can turn that off. Oh, maybe I like it. Ooh, dark mode on the browser. Should do that, huh? Not like dark mode on everything. People are crazy about dark mode. Saves energy. Be better for your eyes. $34 on RAD, all-time lows. Or sorry, 34% down at 94 cents. Flushed through its IPO price of $1.21. A bounce here, maybe back up to VWAP. Is that $1? eBix with a little bounce. What you doing? Got their divvy. GNS at 1.3.
A lot more people are becoming more interested in the Tesla products. So you can see here they're crushing it when it comes to the competition. BMW, even Rivian, GM, and Ford are falling far behind. They're plus 43%. Now we do see a little bit of a happiness dip overall with the company when it comes to social mentions. However, a lot of that has to do with Elon Musk. There's more people talking negatively about him than actually the cars. So I think we can kind of, generally speaking, brush that off. If people want a nice car, they're going to still buy it. When you look at the model by model, it's pretty interesting to see how the different models are doing. So the Cybertruck is actually leading the way on a year-over-year change. So that's not to say that they're the most popular vehicle that Tesla produces by any stretch. It's saying they're gaining the most on a year-over-year basis. And of course, it was a low bar.
I did get a couple puts there just on that double top.
The Model X doing well, and the Y still doing very strongly. But a lot of people are moving from the S and the 3 to either the Y or the X.
Maybe a trade back to
the Y
VWAP.
actually has the highest happiness of all of them. The Cybertruck has the lowest. It's kind of polarizing at about 55%. Some people love it. Some people think it's disgusting and ugly. I can't wait to hear what Kevin's got to say on that one. But yeah, so I know it's coming. But yeah, that's the one that people are more excited than they were last year, but not the most excited about. The Y, I think, is still the big one. It was the X, now it's the Y. But overall, I think that the company is building.
When we are on the shoulder of adversary shoulders.
You know, another thing you can look at besides, trying to grow their market share with lower prices, and besides, doing some of the factory improvements that are causing higher costs now, but will be lower later. They're also building this amazing infrastructure with their supercharger network, and they're getting everyone else to come aboard, right? Rivian, GM, Ford, Volvo, Mercedes. I mean, they're all going to be able to plug into that network, and that's only going to empower Tesla in the future. That's going to pay off sometime down the road. and it's just going to make them more and more dominant. So this is very, very forward thinking. They're not thinking about next quarter. They're thinking about 5 years from now. And I think that with this dip, this is actually a really good entry price for this company long term. Now, Kevin, give me your Cybertruck thoughts.
So follow me here, and I may be dating myself, Landon. If you took the movie RoboCop and you took the lead actor in RoboCop and made him into a car, that's what this would look. That's what the
that's why it's called Cybertruck.
Like. It looks like they made RoboCop into an actual vehicle. Now, all jokes aside, the data says that the 3 best-selling automobiles in the country last year were pickup trucks. So when this Cybertruck finally starts being sold, I think it's going to be like wildfire. They're going to buy these things, right? No matter what I feel about them, I don't think it's a very good-looking car, but I think they're going to be enormously popular. But Landon, that's really just part of what they're doing, right? The Cybertruck is big, but energy storage is growing like a weed for them. Full service driving.
Still just hanging out here though.
$15,000 or a subscription, which will probably make them more money. So what I always say about Tesla, for the bearish, that hurts the bearish case, the pipeline. The things they have in the pipeline should scare every bear out there. And if they get this Cybertruck right, it's just another. Ford sold 650,000 F-150s last year. Just that pickup truck. If they get this Cybertruck right, it's a whole nother level for this company, Landon.
I agree. And, you know, I would be more bullish on Tesla if their truck looked like the F-150 Lightning. I think they'd get a lot more sales. It's pretty wild looking. I mean, when you look at a normal SUV versus the X or the Y and a normal sedan versus the Model 3, it's like, okay, Tesla looks a little cooler, a little sleeker. I get it. But the truck is like on a whole different level.
Correct me if I'm wrong. Does Andy like the truck? He likes the look.
Could be making a little head and shoulders.
He's not going to buy one. I don't. He's not going to buy one. I've got a deposit on it. You know, throw $100 at it just for kicks. But I got a house. Will have one on the Lightning though, so we'll see. But you know what? I think you're right. This is
consolidating.
This is a long-term company, and everybody who used to hate on it, all the big short guys on Tesla, it was always. It's about to crash. Like, it's about to run out of cash. It can't keep up. It can't make these cars. There's nobody that likes them. There's always like a now problem. And that was, I'm talking about 2-3 years ago. They're past that. And so I think that there's a mistake with investors to think of Tesla as what's going to happen this quarter, what's going to happen next quarter. They are clearly building a very long-term company. The pipeline, as you say, is extremely long horizon. And I love the direction that they're going in. I really do think that one day we're going to look back at $200 or $300 as a incredibly low stock price for this company. That might be 5 or 10 years from now, but I am extremely bullish on this company long term, and I love this $65 dip from highs.
What kind of score do you guys have right now? They don't have earnings for about a month and a half, 2 months, Landon, and you know, long term you're bullish, but what about near term? Because, you know, margins are starting to shrink a little bit. What if the consumer takes a hit also?
Sure, absolutely. Now they are getting to that point where they're becoming extremely affordable. I mean, I remember the days of the S being $120,000 and people were talking about buying it. So now they're very cheap cars, but the short-term score, hypothetically, they're reporting tomorrow, would be +30. So not extremely bullish, but bullish enough. But I think the long-term outlook for this company is much stronger. That's the short-term score. I think the long-term score is up in the 60s or 70s. So very bullish long-term on Tesla.
All right, great stuff. Great data as always, Landon. Appreciate it. Have a great weekend.
Thanks, guys. Enjoy it.
All right, thanks to Landon Swan there. Kevin, you know, I think that's that was a good commentary from Landon. It's too polarizing.
Yes.
Cybertrucks, if they just made something that looked somewhat similar to the F-150, oh boy. I mean, you could just explode.
Yeah, I think I want the Cybertruck 2 when they make the improvements to the Cybertruck 1. I think that's the one I want to look at because, believe me, I think this is going to be popular, but I personally, that's just my personal opinion, I don't think it's very attractive. And Landon's right. You make it look closer to the F-150, this thing would be off the charts.
Yeah, so Kevin, so far this month, stock's down 12%.
Yeah.
This week, though, it's up nearly 9%. And up 90% on the year. How do you want to look at this from an example trade?
And there you have it. that's the way you got to look at Tesla. It could be either one. The next 2 weeks, it could be up $20, down $20 easily, and that's the way I'm playing it, Tom. So I looked at Tesla. I did the September 15th, September 1st, so 2 weeks. Starting, the first expiration is next week. I did the double calendar. I did the 245 call and the 215.
You realize it's on camera,
215, 210. Sorry, I did. Yes, I adjusted it. I started playing with it once I put it in. The 250 call, the 210 put. So basically, $20 in either direction. Which, if you look out till September 15, it's that. It's where it lines up. Okay. And so looking at that and where that's at, that gives you an opportunity for a move in either direction. It allows you, if the market dips and you're still bullish, it allows you to sell out of one side and hold on to the other. You're collecting theta, and you get an opportunity to roll those strikes one more time and chip away at both sides of that net debit. I think the one's trading about $5 and change. If you go to the 245, 215, which I was playing with, it's about $6 and change, but it tightens up those peaks of that calendar. But it depends how you're looking at this. If you think the expected move is closer to $20, but if you want to play it tighter, you're just going to it's going to cost you more money to do it.
Yeah, the option market's priced in about a plus or minus $20, $21 move either way over the next 3 weeks. So let's break this one down, Kevin. 2 calendar spreads, 250 strike call. You're buying in the September 15th monthly cycle, and the 210 puts. Selling those same strikes in the September 1st weekly options. Paying a $5 debit. There's your risk, $500 per spread. One of the things I think is interesting about this, and we've got it up there, Kev, on the risk profile, you've got 4 break-evens on this one, because if Tesla stays at or near 230, that's not good for this strategy.
Right, you want movement, right? I mean, it gives you time. Now, remember, you've got 3 weeks. So that's a lot of time in Tesla's life. Right. But, yes, right here, if you see that P&L dip, it dips down. You want it to move towards one of the strikes.
Yeah, and not too often that we see consolidation in Tesla.
Right, it doesn't really, right. Yeah, exactly.
So, break-evens around 203 on the downside, but then also 219. So you want to kind of float between there and maybe chop back and forth. As Kevin mentioned, you can get out of one side of this if the market's open, liquidity is provided. If it moves down there and you think it's going to rebound back up towards 250, that's what you have to look at. So there might be some trade management skills that you might need on this one. But your risk is the $500 that you're spending on that. We mentioned those break-evens on the upside now. About 238.50 and about 260, just over 260. So got nice wide ranges between those peaks, but a good look at a double calendar. And what we always say, Kevin, if you're more bearish on this one, you do one side of it.
There's my finishing point. Remember, this is 2 trades.
5 minute.
You can do one or the other.
Coming down now.
Right? Or you can do one this week and one next week. You can do it as a package. Right. Sometimes that's harder to get filled, but there's a lot of choices when thinking about a calendar spread.
Yep, and you have some assignment risk on those short options into expiration over the next 7 days when they expire. All right, let's take a quick break here. When we come back, we're going to take a look at Google parent Alphabet. The tech giant's up about 47% so far this year. Just hit a 52-week high. Fast Market's coming right back.
GNS back to VWAP. Brad's down 37%. At 80. Down 15. Nordstrom's down. Mine is up. AMC low of the day down 0.7. Losses down 4.8. Earnings. All right, back up. Yeah. Thank you guys for your thumbs up. I appreciate it. Had a little J-Pal this morning. Sell off. Nice bounce. 21 on the day.
to sell one of the October 125 puts against that long or bullish call vertical. Now, I've got a 10-cent credit on it, and that's where it was trading when we started the show, and that's what we have the risk profile at with the break even at 124.90. Now, it's probably trading closer to 80, 90 cents debit on that, so that would take your break even up to 125.90 or so.
Yeah, but remember, when you put this on the risk profile and you're watching it and maybe monitoring it, you can change strikes around, right? And then just hit duplicate order and enter from there. So that's the power of the risk profile. When you see the moves, you can price them, watch them move, and see if is it going towards you or going away from you.
Yeah, and the risk on this trade, if you're paying or collecting a credit, paying a little bit of a debit, your risk is going to be about $12,000 on this one because you have that ability, $12,500, because the ability of the stock to go to zero. You have to keep that in mind also. But you see what this takes advantage of. You're using that short put, that cash secured put to help pay for the call vertical here, Kev. But you top out above 145, but this is definitely a bullish trade. You start profitability above 130.
$15 call vertical, but financed by a cash secured put. So make sure this is, again, what we talk about, 2 trades, right? You can do one or the other, combine them both to make a complex trade.
Yeah, and, I looked at the 125 strike, that's that 50-day moving average, as an area of support. So you have to use the different tools and guidelines that you follow when initiating these trades. You do have some short assignment risk on the short 125 put and the that on this particular trade also going into expiration. But you got 2 months in that, 56 days till expiration. All right, that's going to do it for Kevin and I today here on Fast Market. Stick around, though. Next Gen Investing's coming up.
If that were true, Jack, any choppy day would always end with a rip. Can't just apply to every day. Think FL's coming. And the bearish divergence. Yeah, I mean, the fact that it's hanging out kind of below this resistance isn't good. I want this to become support. Maybe this isn't much of a resistance I have drawn here, I don't know. Seems like it is, though. Somewhere in this range. Oh man, that Rite Aid's gonna... That sucks. Was a heavy hit on the Theta Farm. That's the thing with Theta Farm is, like, as you're selling insurance, you have to think of it as insurance and how that works. Insurance companies slowly make money, right, from premiums until there's a claim. And then there's a claim, you lose small or a large amount of money quickly. So it's the opposite of if you're used to just going long on options, where long on options are usually slowly losing money. Without risk management, without knowing what you're doing, whatever. Because you're slowly just paying premiums for everything, especially if you're just doing risky options, which most people, especially new people, do. Out of the money, short time, whatever. No spreads, just one leg. So you're always just paying premiums for an unlikely event to happen, and then slowly losing money until you hit. And then one time you hit, your account comes up a lot quickly. And it's kind of the opposite with the Theta Farm. You're slowly kind of grinding up, and then if you do get a hit, it's quick, and it's quick. It's a quick hit to the downside and a slow grind to the upside, as opposed to the other way around. crazy. 50 cents by Monday. Yeah, maybe. I mean, this news, like, we're seeing it fast. Even if like I missed the halt or whatever, this is still fast. A lot of people still haven't heard this. A lot of investors, a lot of people will not have known about this until Monday or Tuesday or even like mid next week that even are maybe invested. So it seems like it's so late, you've missed it, whatever. Like buy the dip or it's gonna start ripping now. It takes time for it to get around. Just because we've seen it now and this happened, it's you know, that's why you get continuations. People that aren't watching the markets every day, or you know, even hardly ever, just not watching the markets at all. And interestingly, Rite Aid is, I heard, I'm not sure, I haven't confirmed it, but I don't know if you can confirm it, but I've heard it's majority owned by individuals. So that could be part of the reason for this strange price action here, which was with no, like, just a straight up and down, nothing, no bounces. I'm not sure, but this sell-off, since it is mostly retail, maybe a lot of it happens today and maybe tomorrow or Monday it's flat. I don't know, but usually it takes some time for news to kind of marinate and people to make decisions and that kind of thing, or to come down. So yeah, with that said, I think, I don't know about 50 cents, and it's still quite a ways from here, isn't it? Like, maybe could hit there. Cents would put you down another 40%. Yeah, I mean, see what kind of confirmation comes out from that article. Like, I didn't see any sources or anything like that. Hopefully it's not just a hit piece to get this thing to dump. That would be tragic. Getting a couple calls there. See if we can break out. 1 o'clock. Still stuck in this chop. Might add one here on a retest. Little pullback. GNS has held up well. Is neat if you're in it. Retail sitting depression. There's a report. There's a Wall Street Journal article, I guess. Don't trust the RSI. We'll see. We'll see what comes of it. I could keep it in the farm. Like, it might, might still become fine. Problem is, with the trade, I was already down on it. So, thought this uptrend was. I didn't wait long enough to get back into it, and so I think there were $2 strikes. So I was already down on it, way down here. I wanted to average down. It started to show, momentum, maybe over the 9 moving average. I was going to average into it. So if I was like close to break even, maybe like, okay, yeah, it just needs to get back up to 140 or something, maybe, but I'm not trying to mess around with it though. I'll let it go. That's the cost of being an insurance provider. Times there's claims. Times the house is on fire and you actually have to pay for the repairs. Just want to make more during your premiums than when you have to pay out for the insurance. You're good. And don't insure sketchy health stores. Even call that. Oh my. Realize I only have 1 o'clock, I only have 1 trade left. Too soon. Too soon. Hey! Pizza Friday! Thanks, Guts. Appreciate it, man. Even threw the tax on there? That's what's up. Friday pizza party! Help my rad wounds. Now Dish, they make less revenue, but they're actually profitable. So this should be a much safer bet. Should be. They don't have opioid stuff going on. But given their market cap is reflected of that, 3.2 billion. Rad's was very low already, and now it's 47 million. Might be a good bankruptcy play.
Let's get nuts!
Let's get nuts, man. George is really slow on Friday.
Larger pipeline of unreleased content and global production capabilities. They do believe that this strike will accelerate the decline of the traditional TV businesses, which then in turn, of course, benefits a name like Netflix that is a pure play into streaming. They also think that Netflix's advertising will become a major contributor over time, which I think Netflix has said that's sort of the hope and the whole idea behind their restructuring. But I liked that this analyst specifically did mention Suits, which is, I think, a concept that is sort of genius because right now they have a content shortage with the ongoing strike, and so they're rolling out these popular
Thanks again, guys. Appreciate the generosity,
man.
man.
Netflix originals, obviously. Suits was released many years ago, but almost rebranding, and so it's getting so many views and is gaining so many eyeballs. This analyst actually saw this being a huge tailwind for Netflix, and who would have thought that a show that was relevant like 10 years ago is now being, I would say, definitely a bright spot for Netflix.
You know, I never saw Suits the first time around. I'm gonna be honest, it got me. I've been watching it. It's interesting. It's a pretty good show. I'm surprised, I guess, in some regards, but this was the original Netflix model. I mean, this is the Breaking Bad effect. This is the Prison Break from back in the time. Those are like the OG, at least when I was in college, like binge watch TV shows. That's where like the whole concept of binge watching came from. So good to see them going back to the roots, trying to find ways to do things, using content that's already out there. But it never really made sense to me. And we talked about this with Renita earlier this week. You're going to crack down on passwords. That was never going to lead to less accounts. It might have made some unhappy consumers, but it was always going to lead to more growth. It's just you can only do that one time. So when I considered this being sort of an effort to spur growth, at least domestically, it was more that they didn't think they could grow accounts otherwise. So using sort of their ace up the sleeve, if you will, when it comes to Netflix. But I think this is as much about a really weird down move yesterday in Netflix and a bounce back today than it is about this analyst move or any of these other stories. look, Netflix announced, or through Bloomberg, there was some sort of announcement of how subscriber numbers shaped up in July. That was a strong report. It came out the day before. Netflix was initially higher. That wasn't the reason we saw Netflix lower. You can't convince me of that yesterday. So weird price action yesterday, bounced back today.
You know, and I think it's like we've just gotten too critical of these names. Netflix is still up 40% this year, and we're like, oh, they're underperforming because of the pullback, which is a 6% pullback. I mean, I'd still look at Netflix and say they've been a relatively strong player, especially in the streaming world all year long. So our next name today, though, a little bit different sentiment here, and that is AMC, which has had a lot of news this week. And the news hasn't, in terms of its price performance, been super positive. We took out new lifetime lows in each of the last 4 consecutive trading sessions. But this was all on news, the fact that they are seeing this pretty massive restructuring. They converted their preferred equity units to common stock as of this morning's opening bell. And then before the open yesterday, we did see they completed that 10-for-1 reverse stock split as to reduce the number of AMC shares outstanding, which will then allow the company to issue more debt down the line. Because of the split, every 1 APE unit, a trader will have to convert to around 1/10 of then a share of AMC as of this morning. But that is not the whole story either. AMC will also issue common stock as a litigation settlement payment between AMC and some of those shareholders. This was widely approved by shareholders several months back. I believe it was over 90% of shareholders actually were in favor of this. 10% were not. But the company will provide this extra stock to its investors who held common shares as of August 24th to then settle legal claims related to the APE conversion plan. Now, Adam Aron has been pretty transparent about the success they've seen at the box office, but that they're still needing to shore up a lot of these debt levels. So he's been, I'd say, very, very much honest with the way that this conversion will go. But seeing the way that the stock has sold off this week, Alex, conversion or not, it's down 66.5% this week. That's pretty painful.
Look, they didn't do the conversion because they're doing well. They needed to raise capital. They needed to bring cash to the company. So there's not a lot going well at AMC at the moment, but there's a little bit more meat on the bone. So from a trading standpoint, if you're not involved and you want to have that discussion, there's at least maybe a discussion to be had now at $13. At $2, look, it's basically a penny stock at that point. Do what you will with it. But at $13, where we last saw it, $13.13, a little ominous on the on Friday, but you know, at least we have a conversation to have.
Yeah, and I do think it's even like a mental block looking at it at $13. It just seems like it's faring more reasonably. And I know that it doesn't necessarily mean the value increased or decreased. Just so obviously that mental, mindset when looking at a price $150 versus $13. But we'll be diving more into our 2 upvotes today.
Have a conversation
Those
if it's not
media-focused names, Netflix as well as AMC.
Coffee maybe got a little confused there.
As well as some key example trades coming up next.
He's drunk. It's Friday. It's okay. He's taking shots with Jenny. And I. Yeah, BlackBerry. We don't know buyout price or anything, right? Balls were a bad idea. Still in the chop. Radical new lows. Down 46%, 76 cents. Maybe I'll see your 50 cents today. It's still news, still spreading. Got 3 hours left. A lot of people with high averages on BlackBerry. I could see that. Yeah, the IV on AMC has been very high. I'd have taken spreads or the shares. All right, Chop, you got me. You got me. I surrender.
guys had some pretty
you should.
good reviews there. But the chart is actually doing rather well also here. We can see that we've been trending upwards since those yearly lows all the way back there near 211. We're up about 95% from that point. So strong move upward in this name here. We can see that we topped out around 485, and we've been trending down from that point. We have a downward trend line to work with now. And it's looking a bit more sideways recently, actually. Our moving averages are starting to degrade a little bit. Look at our yellow 21-day and orange 63-day moving averages. The yellow 21-day is starting to trend downward. The 63-day is flattened out. It's moving more sideways now. Speaks to kind of a lack of strong trend direction here. Maybe even a bit of a potential warning sign for a turn downward here. However, what we'd still need to see for that to happen would be a break below the 400 level. This green dashed line right here, you can see that was about where we had some consolidation around this area. We bottomed out there here. So that was an area that stood out to me. That would be a potential tipping point if we were to cross below it there. Looking at our RSI, our measure of momentum here, mostly just following price action, not really seeing anything noteworthy in terms of divergence or anything like that. We had a failure near that 50 midline that separates bullish momentum from bearish momentum as we failed to break out of that trend line there at the same time. So something to keep an eye on there. You want to look for confirmatory evidence from the RSI. When price starts to break out or is rejected, look to see if the RSI is doing something different. It could be a clue for what you might see in terms of future price action here. So that being said, support and resistance levels. 400 to the downside, that's the area to watch here. And it's looking like we're crossing above our 63-day exponential moving average today. That would be a point to hold near about 414. You'd want to clear that level and close above it if you're bullish in this name. And looking like not another indication here that I meant to mention before, we're on pace to form a Harami candle today, where the real body, the distance between the open and the close of today's candle, completely encompassed by the previous day's real body here. So that's a sign of perhaps indirection or indecision in this name. So, you know, not really what either side would want to see. You'd want to see a strong move one way or the other. In terms of resistance, look to the 21-day EMA near 421, or this downward sloping trend line. Beyond that, the 440 level is where we had some highs there. That would be what the bulls would really want to see, a break above that point.
Yeah, and I think that's well put, and obviously pretty clear directional trend to the upside here, even though we've seen that pretty significant retracement, but a name that's still, I'm going to keep harping on it, still 40% this year, and it's like we're discounting that because there's so many other strong names that are taking center stage. But now, when trading this name here, Alex, walk us through what you're thinking, perhaps looking to lean into some of the optimism we felt with Netflix actually earlier this week. It was like only on Tuesday's session this name was having a nice move higher, so looking to lean into a more neutral to bullish example trade.
Yesterday was a pretty sizable move downwards. As Rick talked about, we're seeing the stock try to get its footing here today and firmly above that 400 mark at which it tested about a week ago, I believe on the 18th. So as Rick had talked about some support levels, that seemed to be a relatively critical one. That's where I focused in on for the example trade. Looking at selling a put vertical below the market, going out to the September monthly cycle, which is the September 15th option cycle. We're selling the 400, 395 put vertical. You can see the risk profile here behind us. If we're assuming a $1.50 credit, which is roughly in line with where it was trading before the show, that would be a $150 max profit, $350 max loss. You find that max loss, $5 wide spread net of the $1.50 credit. You're left with $350. We know that means $350 in max loss. Break even, you simply take that credit away from the short strike and you're left with $398.50. That corresponds to there on our risk profile. And as we zoom out to look at the entire risk profile, you'll see all profit above 400. If these options expire worthless, it'd be max profit. And of course, all risk to the downside below 395 is max loss. So really just asking for Netflix to hold on to that 400 level, which it did last week. And this one can have good things in store for the next few weeks, Jenny, but neutral to bullish look at Netflix.
Yeah, I like that. A well-put way to look at Netflix, which is now pretty much like unchanged on the week here, but a name that is making a 66% move to the downside following some pretty major restructuring of its overall business and shares is AMC. So shares are down 9.5% on the session. Although, Rick, I will say that looking at this name at $13 looks a lot better than we were looking at it earlier below $2. So there is, I truly believe, like a mental block associated when you see a stock that's, below $2. It sort of makes you panic. $13 doesn't necessarily change the massive move to the downside, but this name is challenging, fundamentally speaking, as well as those enthusiasts that love AMC.
Kenny,
what in the world?
It really is, and kind of just
you're just confusing people.
Here, we don't have any kind of.
They're already confused enough with
I'm just
splits.
here to give a dispassionate look at some important
better.
levels on the price chart here.
Gosh, man.
And emotion and trading in general are not a good mix. You want to try to be clear-headed and make decisions based on data and whatever things that you choose here. So just kind of a general comment on the way to approach trading. Just be dispassionate about it. And we can see here that this is a pretty rough chart, in terms of just looking at the raw decline here. We're down about 88% from the past year. We've crossed below all of our, pretty much most of our notable technical indicators here, volume profile,
back to
point of control,
VWAP.
moving averages, all that stuff has been kind of left far behind in the dust here. So a lot of our conventional tools that we use in this segment a lot aren't really very helpful anymore. One thing that can provide some help is standard deviation channels. And what we do there is we take a linear regression line based on the past year of closing prices, a line of best fit that just kind of goes through the midpoint of all our data. And then we take standard deviations above and below that point here. You can see that we're below the -1 standard deviation channel, which comes in right around 2162 here. So that's suggesting to us that price is at a relatively extreme level based on its own history here. So what you would need to decide then, is this an opportunity for mean reversion? Is it stretched too thin? Is it going to bounce back up? Or is this a sign of continued weakness here? So trend following versus mean reversion. And frankly, there's not a lot of signs that the trend is changing at this point here. All our moving averages are still pointing down. RSI, our measure of momentum, deeply into the oversold area at this point, typically regarded as a sign of further weakness here. This volume node also stuck out to me too, suggesting that we may be seeing some people trying to make a play here, at the bottom. Not sure if it's unloading shares or buying, trying to make long entries here. It's just something that is kind of tough to analyze right now because of the speed and severity of the decline here. So in terms of potential support, -2 standard deviation channel is our orange line there, comes in at 656. To the upside, potential resistance at our -1 channel near 2162. Beyond that, I threw up a 9-day exponential moving average around 2648 is where that one comes in. Those are some potential areas to watch in this name, which has seen some very difficult trading.
Yeah, and I think that you put that very well. And of course, when looking at the technicals here, these are very objective. I mean, you can't really argue with the price activity we've seen this year. And I think important sort of disclaimer that we are not, excited about seeing shares lower, obviously, this
Certainly
week.
not, no.
Certainly not. No one wants that. But we will leave there a really great breakdown of both
again.
AMC as well as Netflix today.
I wanted puts,
You
but
have
I don't
our
think I'm so
chart
close to
master.
VWAP.
So now I'm looking at trading this name, Alex. We haven't discussed actually an
Yeah, it's
example
hitting the
trade of this
highs
name in
again.
quite some time, given its relatively low stock price. So I'm excited to know your thoughts leaning into a more bearish example trade.
Yeah, and so, look, if you want to be bullish this name, you don't need me to tell you the strategies. You can buy calls, you can buy call verticals, you can buy stock shares. But we haven't been able to talk bearish strategies in a long time at AMC because, quite frankly, at $1.50, what are you going to do? You can't do anything. It has to go to zero at that point. But at $13, at $12, well, this thing can actually go a little bit lower on a per share basis. And that doesn't mean that's going to. But there's also nothing that says that this stock needs to be at a higher price either. And so Rick used the term mean reversion. I think that's it's obviously a mathematical term, but that's something that can apply to implied volatility. We think of implied volatility as a mean reverting asset. Typically for a particular underlying, Jenny, there's sort of a natural normal volatility for it. But prices are not mean reverting. Prices don't have an average, a long run average that they work towards. this stock, quite frankly, could go out of business, or it could recover and go much higher, but it wouldn't be because there was some average it was working towards. It would just be because the company did well, there was a short squeeze, or the company didn't do so well. And so we're looking at a bearish strategy. We're buying a put vertical, 15, 10, 250 debit is half the width of the strikes. This is the same type of strategy that we look at on any name. You could take AMC out of this and change the strikes around, use a different stock, and it's the same strategy. So just because AMC has some different things going on doesn't mean that these same strategies that we talk about in other names can't apply
big
here.
engulfing candle on the last 5 minutes.
The stock moves lower, below 10s,
but you're still in that chop range up there.
Above 15, max loss, that's 250,
VWAP.
break even 1250.
Looking
Not
good.
much else to say here. If you're bullish, look on the call side, maybe flip this around. But something else to think about, especially given that we really haven't been able to talk about bearish strategies in AMC, because as a penny stock and as a hard to borrow stock, it's really difficult to do anything on the bearish side.
Yeah, that's a really good point, because when we were looking at it at just below $2, it's like, what do you sort of do from here? But now, obviously a little bit different of a position, looking at it at around $13 a share, but we will obviously have to wait and see and watch this story, as now it will trade without any connection to APE. They've been delisted officially as of this morning. Also important to keep in mind that for both of our example trades today, they do contain multiple legs that can lead to multiple transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add additional risk like unanticipated exercise or assignment. Now coming up next, it's time to move away from all that down talk. We're looking at a name that is seeing a nice move to the upside today. That is a firm with shares up over 30%,
51% down to
after
69,
a really strong second quarter.
20. Final trade. I didn't even realize. By 130. All right, there's a break on VWAP. Trades around VWAP. Yep.
hold, and 25 have sell or sell equal ratings. Sentiment has been so, I'd say, skewing bearish because this company has not been tested in an environment like this current one, with concerns of a recession and rising funding costs and consumers under some pressure due to these higher interest rates, higher inflation. There has been some fear that how does a firm weather this storm? We've never seen it done before. But so far, at least in terms of their quarterly update, they seem to be doing perhaps better than expected. I'm not going to go as far as to say that they're doing really well. Just I think maybe a lot of these fears were put to ease today. They did say that their shares of credit overdue by 30 days or more is actually declining. It declined about 0.3 of a percentage point to 2.3. That's always encouraging when all you hear about is that the consumer health is in trouble following these retail earnings. And they also were just highlighting the fact that they are seeing this continued interest in buy now, pay later, and mentioned that their loan approval process is not a completely seamless one. Not every single person gets approved. So they do have some degree of credit checking, which then is, I'd say, they're trying to boast that then makes them a little bit more insulated from some credit risk. So interesting move today, though, nonetheless. This is a FOMO type move, 30% higher, and it is held on all day long.
Yeah, a couple things I think stick out to me that are kind of specific to a firm when you start looking at some of the different metrics, some of the things that you mentioned. Average order value fell 14% to 317. So in a time where all we talk about is inflation and things getting more expensive, we as consumers, or at least those who are using a firm, are actually spending less per order. So that doesn't necessarily jive either with the inflation story or one that the consumer is still strong. So those two things can't both be true and this to be the case. At the same time, active consumer growth is slowing, so they're not getting as many people into this ecosystem as before. Some of that could be due to some of those credit check provisions that they're putting in, basically trying to find a little bit more stable potential customers. But delinquency rates, and this is sort of what you were getting at with some of the overdue stuff as well, slowing to 2.1% in the fourth quarter is, I think, encouraging, because this isn't necessarily seen as like the stalwart of credit. If there's going to be credit risk somewhere, some of these Affirm type buy now, pay later companies are probably going to feel it before, let's say, American Express does. That's tied to, maybe some of the bigger corporations. So we'll see where things go, but no doubt about it, seen as impressive today by the street. And
okay, not to like totally then raid on all the sentiment that you just said, but when you look at a max time frame chart, it does put into perspective really what this name has seen as far as its price activity. We traded as high as $176 a share. So now we're trading just below 18 with a 30% move higher, up 80% year to date. Doesn't just, I would say, even hold a candle to the enthusiasm, perhaps overblown enthusiasm we saw during the pandemic, like you said. No, and I think it's really nice that the street allowed it to be 176 is the all-time high, and we're trading in the 17s. I can even do that math. That's like 90% off the high. But some of this, though, and this goes beyond just a firm, some of these stocks never should have been that high. Let's just be frank about it. Like these valuations, and so many things are going to have to go right. These growth rates are going to happen into perpetuity, if not accelerate. Think of a company like Zoom Video, I would put in that camp as well. Peloton, that they weren't ever worth that much. I get that they traded for that much, and the market's right, whatever we want to say, but it wasn't sustainable, and we're seeing that now. But that doesn't mean that this company is worthless. That doesn't mean that all these companies that were maybe a little bubbly at times need to go to zero. 90% is still off its high. It still has value. It's still a pretty big company. If you think about it in terms of market cap, it's still $5 billion. That's still a pretty big company. Maybe it isn't, $50 billion or whatever it was before, but maybe it shouldn't have been. From a trading standpoint, though, I think the FOMO feeling today is pretty clear. It's to the upside. Even with the stock market being a little wobbly here, up, down, kind of like that DJ Khaled song. Not the case for Affirm today. Stock's doing pretty well, holding in there, doing impressive, and it seems to be pretty resilient. So looking at buying a call diagonal for the trade example here, the trade illustration, in which we go out to October, we buy a slightly in the money call. So that's the 17.5 in this case. It's just ever so slightly in the money, but it is nonetheless in the money. And then selling an out of the money, shorter dated call, in this case, the September 20 strike call. If we do the entire package
for a $175 debit. That would bring the total risk down to just $1.75 or $175 rather on that $1.75 debit. If you went out to that October monthly expiration, Jenny, and say, you know, the 20 call expired worthless, your break even would be $19.25. On the screen, we have a different number that's going to be reflected and estimated based off of sort of that September timeframe. So keep that in mind when looking at this. But this is a strategy that looks for a move higher. It seeks to perform like a calendar spread, but because of how it's structured here, it basically tilts that risk profile on its axis. You can see that up on the screen where it eliminates the upside risk. I think that's the most important point.
You know, this week we're referencing DJ Khaled talking gas and Abercrombie & Fitch. It's like we are back fully in the early 2000s, and I'm actually not mad about that. So really great breakdown, though, of a way to look at this name that is seeing some love this year, but of course, bigger picture has been beaten down from its pandemic high valuation. But coming up next now, we will look at another name that's actually making an over 30% move higher as well. That is VinFast Auto here, which is a new name to the public markets, but it's now the second most valuable EV or automaker just behind Tesla. We'll discuss that move more with Renita Young coming up next.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Here on the Schwab Network, we're talking VinFast Auto. This is stock ticker VFS. And it, according to the headlines, I guess, is something we should be paying attention to.
432, why not?
More valuable than Ford, more valuable than GM. And I gotta be honest, I just heard about this like 3 hours ago.
And the controlling shareholder now is Vietnam's richest man and now the fifth richest person in Asia because of this market debut last week when we saw shares surge 500% and making another 30% move to the upside today. So here to tell us now more on this name, I'd like to welcome in Renita
GNS
Young,
broke
senior
out.
correspondent for the network.
They suck
so
again.
Renita, admittedly, like Alex, I also haven't heard of this name, but second most valuable automaker? I mean, that's unbelievable.
I think
Talking
DJ
about
Khaled
VinFast
would
now,
say,
huh?
and another one, and another one, another
You're getting
one.
desperate.
But this stock is charged up, and it's been that way ever since its going public last week through a special going public process. But the stock today, it's up more than 340% week to date. And it's all because the company is actually doing a lot better than what people would have expected. Now, it's at levels now beyond legacy autos, Ford and GM. Its market cap has soared beyond those levels, but it's still not above
moving my stops
Tesla,
up,
of course. But VinFast has racked up a ton of watchers on social media, on social platforms for investors and traders. We're talking about stock twits.
I'm done for the day.
Some of the watchers, however, they're wondering whether or not the company really does deserve the type of hype that it's actually getting today because of where the business actually stands on the balance sheet. Now, the underlying business is doing less than $1 billion in revenue, and then the company does have negative cash flow from operations of between down $1.5 billion to $2 billion. So for the short term, analysts say, yeah, VinFast is trading on the hype and the momentum, but it's a big question as to whether or not the company can carry this momentum through.
No one's ever heard of this company.
I think that's well put, Renita. And you know, there's not really much to add. The story
There's
is
collateral.
like very much developing right in front of us. It's not even optionable yet. It hasn't even been around long enough for that, and so there's just not all that much information yet. We know it's based out of Vietnam. We kind of have an idea of what the products look like and the interest in them. And
trading on VWAP.
But that's about it. This is just the market excited about this stock, and it's surging. Anything else that you'd add here before we say goodbye?
I did read that this company has been importing vehicles to the United States, so they're trying to go for Tesla's market share, of course.
I mean, that was another interesting aspect of this report, that we could see them enter the race to be one of the most profitable, successful EV names. This is a crowded space, especially out of Asia. We have so many names that have not exactly seen the most stellar week either, but we will leave it there. Media, thank you for the breakdown as always, and thank you for the DJ Khaled reference. I love that we keep bringing him back at this point, but we will leave it there. Now, coming up next, it's time for Under 30s. We are looking at Hawaiian Electric moving the complete opposite direction here with another down day. We'll discuss more, some of the litigation they're facing coming up next.
Do they actually have 6 types of SUV? What? It'll look-see. I guess if they call all these SUVs. There's 5 different cars. They're not all SUVs. It's an actual company though. That's better than a lot of the BB IPOs from China. I mean, they have a website. Clicked on the website on Webull, brought me to a holding company. At 83,000. Looks like a Kia Carnival minivan. At this range, these candles are just too big. Big of a range. Chopped out. Here's on its uptrend to $100. Looks like Rad might be actually trying to make it for VWAP now. Minutes to 2 o'clock. It is Friday. I could do some Tesla dailies. Else, I'm going long. Going for the high of the day. Let's go. Love getting a nice call on a big fatty green candle. Nothing like a good fill. GNS consolidating up there. Would you look at that?
In terms of market cap, which right now stands at around $1.2 billion in terms of common and preferred shares. I suggest that, again, if the company is proven to be liable in some capacity, the outgoing contingent claims are probably going to exceed that by 4, if not even 10 times that amount. So the point I'm trying to make here is that despite the fact that Hawaiian Electric will continue to operate, it may end up operating for a short period of time in bankruptcy. And what that means is that common shareholders will be completely wiped out. Most likely preferred shareholders will take a huge haircut, if not be wiped out. And even debt holders, bondholders, which have senior secure claims to those cash flows, will take a haircut. And some of those bondholders may be wiped out. If you look at S&P, they've got a rating on the bonds or credit rating to junk. And even, again, analysts are very wary of this. Bank of America has an underweight rating with an $8.50 price target, but that's still contingent upon, again, the uncertainty, which, again, can compile on a forward basis from here.
So, George, as we kind of assess this, obviously it's a topic of discussion. It's going to get interest. Eyeballs are going to find the name that's down 17%, and then they're going to see it's down 70% and say, hey, you know, this is a value stock. You know, this is a buying opportunity. The stock was just $40, $50. Now it's $9. Of course, we know there's a real reason behind that. It's not an unprecedented situation. PG&E, I believe it was in 2019, was the largest utilities provider in that part of California. Wiped out. So if you're looking at this, George, is the point of emphasis then is like, hey, look, this thing can swing around and ebb and flow, and there's potential trading volatility to participate in. But from an investing standpoint, this is an all or nothing, it seems, from a common share perspective. Seems highly unlikely if some sort of fault is proven in a court or whatever that standard is, that this is going to be a situation where common stocks are wiped out.
That's the thing. I mean, you have to think about the utility as a company. I mean, of course, they're going to lose some revenue from the area that was affected, but they cover all of Hawaii. So cash flows will be there. The utility will continue to operate, but it comes down to who is going to have claim to those cash flows. Well, the residual claims went to equity holders after the bondholders are paid, preferreds are paid, and of course, all of the expenses are paid by the company. But now those claims or cash flows will go towards paying liabilities outside of the company. And that's where common equity holders may get wiped out here. But here's the thing. It may not happen overnight. It may take some time. It could take years for this to play out. And again, questions are, do you want to pay the economic cost of holding these shares for years, having it not going anywhere? And that's what you have to consider if you're looking at this. So there's a huge risk involved in buying shares at these levels, despite the fact that cash flows are very robust still for the business because it is a regulated utility. But it comes down to the capital structure. And again, even post-bankruptcy, they'll reissue new shares, but old shareholders will be still wiped out. And that's something you also have to keep in mind, that even though the company's still going to operate in bankruptcy and afterwards, the existing common shareholders will not have claims to those forward earnings.
Yeah, and George, I think the really key takeaway, like you said, there's just this added risk now in looking at this name. So with the rest of the volatility in the market, it's sort of like, why would you take that chance? But obviously, we'll have to watch the story as it develops and we get more news about some of the lawsuits this company is facing, frankly. But we will leave it there. Appreciate the breakdown. As always, George Tella, Senior Markets Correspondent for the network.
I was done on my other account. I'm using my other account now since I'm not applying for
investing. Our very first week as officially the Schwab Network. Coming up next, we have the watch
like
list with Nicole Pedalini.
Taking another one. Looking to get to the high here at least. But bad entries, gotta be strict on your exits. I think I'm gonna start trying some strangles next week. Maybe just paper them for a bit. $45. Stop. Still going? Dang it. Holding above there. Probably get more. Yeah, 145 is what I got. I don't want to buy at the high. It did make a nice bull flag today. Your voice of reason got to me. Which was good. It was a voice of reason. And it got to me. Oh. Like it's about to break that there GNS. See if SPY can complete this cup. Kind of an ugly one now, but doesn't have to be pretty. Break. I'd like to see barbecue have a rip in the end of the day. Still looking good though. Very nice. On this other account I have to trade can't trade daily, so I'm trading Monday's contracts. Not quite the same returns, but much easier to trade. Not quite the same losses either. Another one there. Don't like how it's hanging up. Trying to make a right shoulder here. How dare you? 2 o'clock, a little volatility. There you go. Less buy. Looking for 439.49 if it breaks through here. My next take profit. Blackberry's holding up pretty well. Ads slowly climbing back up to VWAP. Baby steps to bankruptcy. How's Mullen? Down 5.
Because investors are starting to see the price tag that it's going to be on these names. I mean, you know, the price tag might hurt the stock more than the actual walkout, but this is going to cause problems. You see it in UPS. You see it in all these different companies. Yeah. You know, you see it in movies and theaters and television. There's problems with unions across the spectrum. You have a very union-friendly administration, and they are taking their turn at bat to get higher wages across the board. Now, you're right. I think that these stocks will wait until they see the actual price tag on this deal. But you and I both know, Nicole, the rumors, what we see flying around, it's not going to be a small number. So in an industry trying to convert to electric vehicles and trying to deal with the profitability of making electric vehicles, this is just another nail in the coffin for these firms. It makes Tesla stronger, and it makes all these companies
weaker. And we're still
Nicole.
caught in chop. I'm just going to trade the range a little bit.
Absolutely. It wasn't that long ago that you and I were talking about the UPS deal for the union.
Yes,
so
exactly.
You're absolutely right. You're absolutely right. And we see Stellantis, Ford, General Motors, these are the names to watch. And no one likes uncertainty. So we'll have to wait until really mid-September to learn more about what really happens if they decide to do something. How about yesterday we had on Dan Ives. He was bullish on Tesla yesterday. He always gives us a bull case scenario. And now he's back. Today he's out there again, right?
Well, you know what it is? In the book of bullish stories about Tesla, this is just one more chapter. And it's suddenly EV chargers are becoming a side business for Tesla that could boom into between a 10 and $20 billion company. Now, Elon Musk thought originally he would just be charging his own cars. He didn't know he'd make chargers so efficient that everyone
He was talking about that forever.
Chargers. So with all the list of things to be excited about in Tesla, like
that was priced in like 15 years ago also.
The energy storage and the full service driving and robo-taxis.
There's nothing that's not been priced into Tesla at this point. They could land a robot on the moon that finds a cure for cancer, and it would have been priced in for Tesla.
Nicole. So yeah, in the book of bullish
I'm a
stories,
bull
this
on
is
Tesla.
just one more chapter that Dan Ives is talking about.
Yeah, without a doubt. I mean, they're talking about $20 billion in revenues because of this supercharger. It really, it's going to add up. It's going to add up. And there's a lot of companies that do something similar. So I'm curious to hear about the competitive landscape there, too.
GNS is about to freaking break out.
Charging all the time. It's much of the same.
Nicole, wait till you see. Wait till you see the first time you see a Ford or a GM car charging at a charger that says Tesla on top of the charger.
Right? I know it's coming.
Tesla makes a lot more sense as a charging network anyways, the name, than just a car.
Thank you, Kevin Hanks. All right. Now let's take a look at the bigger picture. Ben Emmons is with us, Senior Portfolio Manager, Head of Fixed
Washout bottom?
Income Macro Strategy at New Edge Wealth. Thank you for being with us.
I mean, it looks like it's washing out.
Jackson Hole, because I think there was so much anticipation. We got a lot of what we expected.
Right, let's see here. I only have one left,
it
actually.
Sounded for higher for longer, and that they can raise rates if they need to, worried about inflation. Was there anything that really jumped out at you?
So he was hawkish in that speech because he did highlight a lot of
like this guy's
progress they
accent.
made, but they have to see more evidence for inflation to come down and the labor market to loosen. And he definitely made a warning there, like, you know, there's still not enough progress.
He's got like
there,
that accent of someone that would murder you.
Tightening and loosening of the labor market, then they would raise rates. So I would almost describe it like this was a hawkish speech with maximum optionality, meaning
before he did
you know, you keep your options really open. But he did indicate like that there's a possibility for this rate hike, and the markets did respond because the probability for November really went up as those headlines came out. So I think the market's thinking now that the Fed may have to move to this fall rate hike.
Right, so maybe we'll see a pause in September, like we did earlier this year, and then maybe the hike in November, because he did note the lag time, the lag effect for some of these moves that they've made, and big ones at that, since March of, 18 months ago, right? So that
I'm pretty sure he actually is a hitman on him a couple movies. Look at him. He's wearing like a hitman suit.
Are you worried about a recession, for example?
Well, my call has been all year there is no recession. I'm even now on the call that I think in 2024 it's not very likely to see recession because the way indeed this monetary policy is playing out. You know, a year ago Powell promised us pain, and all we got is gain, which means that his message was actually sort of saying to the economy, slow it down, but don't crash it, right? So meaning people are maybe adjusting. Inflation obviously has come off a lot, but it's all gliding down. And that, I think, gives me a lot of confidence that next year it may not necessarily lead to this downturn that we're fearing. At least that's what it looks like right now.
Closing this last one.
Yeah, I mean, it was after that.
I'll look for a
we saw the
reentry maybe
S&P
at some
drop.
point.
Maybe
a break and a retest.
And I think that's why everybody was anticipating this so much, because last year we saw the S&P drop 3% after Jay Powell spoke at the symposium, and then the month following we were down 13%. Where normally after the symposium, if you go all the way back to the mid-1970s, the 1 month following is up just 0.3%. So it's usually not such a market-moving event. So maybe we'll see more of that. In the meantime, tell me about the globe. I mean, we're seeing growth in Japan. I'm seeing growth in India, less so in China. When you're looking at the central banks and the coordination there, is there anything jumping out at you? I mean, a strong dollar is certainly something.
That's for sure. And I think if you focus on the strong dollar for a moment, we also get Christine Lagarde in about an hour from now speaking. Lots of attention to the ECB now.
That's right. That's gonna cause some after-hours moves. Oh, it's in an hour. Never mind.
For a period of time.
That is. That's the money guy.
Because in Europe,
I won.
the data
I
has
won the
gotten
money.
more weaker
The money
over
is
the
mine.
last period, whereas our economy
It is that
strengthened.
voice.
And if you
The money
take
is all
that,
mine.
that's really, I think, a sign to what's happening in China. The
I won the
relationship between Europe and China and trade is
Kind
very
of similar.
strong.
This guy's more like an accent.
China weakness and Germany weakness is something
The other
to
guy's
watch.
just like
I guess
old.
for the global scenario that you could think of a slowdown coming
That's
further
true. They do
through.
kind of both have that.
On the other hand, Japan
Sean
shows
Connery.
resilience in inflation, right? Meaning inflation is actually very sticky. Ueda, the Bank of Japan governor, he speaks tomorrow. They're at an inflection point too. Interestingly, he's at a panel where they talk about inflection points.
Well, we just were showing how Bank of Japan has the negative, and those are some of the next meetings coming up throughout September too. In the meantime, you're balancing a portfolio too, in addition to your macro strategy. How are you going about making the positions?
So I have taken this view that we still have to stay shorter durations, we say, meaning you don't be at the index level of maturity, right? Second, you can maintain a risk position in high yield and credit because that's the reflection of the strength of the economy. Thirdly, it is a defensive positioning because the sectors like healthcare or utilities or energy have lagged. They have actually some value, I think, there, not only in stocks but also in bonds. Lastly, technology is dominating, obviously. I've looked at technology credits, like technology corporate bonds. They're actually, I think, really underpriced for where the technology stocks
are.
Oh,
so you like those?
So that's, I think,
that's a good way to play tech and get some value.
Yeah, thanks value.
Yeah, it's interesting. So, I mean, you don't want to stay totally away from growth, right?
No, I think that the growth picture for these companies is so strong. If NVIDIA has the sign of what you can achieve with adjusting your business model to AI,
eBay's up 9%.
Then there will be for Microsoft and others that kind of growth in store, at least near it. So I think
it's part of the farm.
Technology will still really be dominant, even though a lot of fears that you're going to see another drawdown in those stocks. If that does happen,
I think it
will be a buying opportunity, and I think particularly in the bonds of those companies.
I just didn't like the bear flag.
It sounds like you're staying pretty nimble.
Nice little bounce there.
You know, in the short term, just in case.
Just in case.
Yeah, got it. Ben Emmons of New Edge Wealth. Thank you so much. Great to see you, Ben.
Thank you.
Okay, up next, a few stock picks for you. Paul Schatz is standing by and has a reason for hope looking into the end of 2023. He'll explain. Coming right up.
You say New Edge Wealth? I forgot where that guy was from. 3% on GameStop. Probably just kind of consolidate, chop here for a bit until earnings. Unless the market really continues selling off next week, how hard it does. But it could hold up even with the market selling off. Shut up about your GNS pop. Dang it. 22%. Nice. Well done. 139. New high there. Why the scale helps you. Good job. Good job with the scale. You have enough in so you don't go up to FOMO. Some profits. That's great. All good things. Micro mobility up 20% today. $1.40 on it. That is neat. $1.40.50. Nice, climbing a little bit. $1.41. Here's this boy. Buy. Testing these highs here. There it is. That's what I was waiting for. Alright, we caught a good amount of that. Reminds me of this little trend. That guy. Me up 3.2. Going out smart, man. Smart. I mean, I like it to 145, but 143 is also a resistance, kind of anywhere in that range. But yeah, if you don't want exposure over the weekend, especially, sell on those big green candles. I'd like it a little higher, but I'm not even in it, so don't listen to me. It's good discipline though to sell on a rip on green candles. So if for nothing else, good for your habits, habit building, discipline. Rejecting there. Good even. I don't think we're going to get a huge dump or rip necessarily. Kind of right in that equilibrium. Maybe even settle down to VWAP. Or maybe could come a little higher to test some of the highs there, but I don't think we're going to get a big continuation today. It doesn't seem like it. 144 on GNS. If that 145 is resistance. If that breaks, we've got 152 perhaps. What kind of trend we're building here? Is it the same? No, it's more aggressive. A little bit steeper. $144.5 on GNS. There's a spot top of that range. If it rejects, break there, I might be bullish again. I don't like buying on the breakouts as much, but dang, this was a nice trade right here actually. Hard to see that setup though, honestly. There's a break on it. It wicks back down. Could be a nice short. Back down to VWAP even. Might keep going. Yeah, it's liking it. 220. Hour and 30. Oh, there's the pop. I'm too slow on this brokerage. Oh well. Getting the full cup here. Maybe if there's time on the handle, I'll go along. SPY is almost green 1%. Pretty big range today. Pretty large wick there. I'm trying to figure out the top here because the 180 moving average there. The 50 up there anymore? 50's down at the VWAP. Might just take this short instead of even. Yeah. We could even build all the way back up to this shoulder right here. 441. Potential that rally back up to there before back down next week. Finish that right shoulder. Up, Christopher. Might take the long, wait for a little pullback. I'll try and short this. This cup could come maybe at the very top here, or if not, I mean, even just a handle. But looking on that hourly, I think we do have some room. It's 2:30. We have an hour and a half. Get a rally the rest of the day up to that 441.16 price target. See some pattern. I was too slow. I was going over to do it, and that candle just went boop. Broke that resistance with a vengeance. GNS 27%, 144. Top of this channel might line up with that horizontal resistance at 152. I'm probably about to make a new high here. Your horse purple tie. Wednesday pump? Did he speak on Wednesday too? Oh wait, do we get? I don't remember. Is that? GME up 3.6. Get a little steam from that. And Barbecue up 1.4. Well, all right then. MC down 12.3. Kind of a weird melt off. Is this what you call washout? Flat and like the ground is eroding. I'd call washout. Radical doing. Holy radical. Not even close to view up. Two lows there. Spy reach in. Fill time. Fill time. Put your cup wherever you'd like. As a handle. $148 GNS hit. How many day trades would have considered playing that breakout? Bull flag though. Bull flag breakout on that hourly.
You're providing something.
Just had to dig a little deeper.
You've already seen now profits from revenues swinging to a profit there. You have big plans for opening new stores. But tell me about,
how's Kappa doing?
As the analysts are raising their price targets across the board, this was a $22 IPO, I believe, and I know it had priced on the higher end of the range, and we had an exciting day here. But right now, you know, it's at $42, and you have analysts moving even higher. For example, I see 52 from Piper Sandler. So there's a lot of excitement surrounding this one overall. That being said, tell me about the plans to continue to expand the company so more and more people who maybe don't know Kava will soon.
Yeah, so we've talked about our target of 1,000 restaurants by 2032. We opened 2 new states in the quarter, Missouri and Rhode Island. That kind of gives you a sample of the different types of markets we can succeed in, and that takes us to 24 states that we're currently operating in. So whether we're in Back Bay in Boston or Bryant Park in Manhattan or Birmingham in Alabama or Fayetteville in North Carolina or Fayetteville in Arkansas where we operate, you can see that this cuisine is resonating in both big cities,
you just dropped 2 Fayetteville?
In suburbs, in small towns,
geography.
And in all regions of the country. And that gets us excited to continue to build out those 24 states as well as expand to the 24 plus states we don't already currently operate in. And we have talked about we will be opening in Chicago next year, which will be our first entry into the upper Midwest market, which we don't currently have a presence in, and excited to bring our Mediterranean cuisine to
the
those
cup might be the very high of the day.
Look, it's a great company, and I know you have products in Whole Foods, for example. I often buy the Kava tzatziki. I mean, I love that dip. It's a great one. Love it.
There's still enough time to get a pullback to go long if it wants to give us one.
Where you see growth for that side of the business? Is that a side of the business that's important, and does it contribute?
These contracts would have been nice if I held those to that chop.
I think our profitability this quarter is an example of the robust infrastructure we've invested in over the years, whether that's our direct source supply chain or our vertically integrated manufacturing infrastructure, which we're able to leverage with that consumer packaged goods product line. It's still a very small piece of the business, but it does bring a great brand health halo and an awareness halo.
48
for example,
GNS.
we've been selling our dips and spreads in the Chicago market in the Midwest for over 9 years now, and now we'll be able to come into that market with our restaurants and have some embedded awareness. And the products also give us a unique opportunity as a culinary brand where we can have that precious real estate in your house, in your refrigerator,
take that short for that
being served to your friends and family in an environment outside our restaurant to really broaden out, how we engage as a brand with our guests.
Look, I think that when you have your
Live in
Mediterranean restaurant, that gets the feet in the door, and that's how you make your sales. But the costs behind everything, I mean, Chipotle, for example, and not to do the comparison, but you are in the same type of business in the restaurant world, said, while avocado prices came down, all their other prices have been going up. You have things that obviously can be volatile and go back and forth. I
Market
mean,
cap
where are your
1.8.
biggest costs
Just
these days?
melting up.
How are you
Here we
doing
go. Let's see if
finding
it hits a
labor,
cup.
or even finding the
We have a
space
cup
to
here,
meet
some
that
resistance.
goal of the 1,000 locations? So talk a little bit about some of the daily costs, the labor picture, and the real estate that's needed.
Yeah, so we've been able to expand restaurant level margin
Got just
while
about your cup
mitigating the
completed.
price increases we've taken and really work
Maybe
on
a
behalf of our guests
or
to drive that
maybe a
value
pullback
proposition. And we've
to
been able to do that, again, with that vertically
here.
integrated infrastructure, the
would be
other
neat.
investments we've made in over the years, whether it's our digital infrastructure, our operations, and our direct source supply chain, that really, as we're rapidly growing, we're able to get those economies of scale and create that operating leverage. And then on the labor front, you know, it seems like a lifetime ago, but we took our starting national wage to $13 an hour back in 2016, back when the national average wage was down at $9 an hour. And we've taken subsequent wage increases every year since. So we didn't have as much wage inflation as maybe some of our peers had during the Great Resignation and over the past couple of years. So the business had those investments and was positioned to really create
GNS
that
is moving
leverage
a bit.
as we scaled and mitigate some of those
30%.
inflationary pressures
That ain't
were
bad.
affecting the industry at large.
Yeah, and I know you have a very distinct menu, and that too can be a draw for certain
Volume today on
shoppers
it too.
I really love speaking with you, Brett. Glad you're able to join us on the show. Wishing you and the team continued success there at Cava. What
How many settles cash even anyways
Mediterranean and
from
healthy
Trade
food
and Spy.
too. Brett Schulman, thank you.
Thanks, Nicole.
Co-founder and CEO of Cava, Brett Schulman. All right, still ahead in the second half of our show, a dive into this month's ETF flows. And later on, a look at the latest consumer sentiment data. It's all coming up. We'll be right back.
Much spring do the Bulls need here? Would have been another like 100% of those contracts if I held those. Maybe more. They were tomorrow, they were Mondays, so not quite as much, but Bubba, did you take any profits today? Nope, no pullback there. Look at that thing. Straight busted through. Getting some shorts closing, perhaps. A little short covering into the weekend. Long weekend. Monday's off. Is that right? I have to go on a vacation. Gonna dump on some candle. So hold. And... You didn't take any profits? All out or all in? A red candle in GNS. Thanks, Tasty. Appreciate the support, man. And generosity.
Let's get nuts!
Let's get nuts. Just sold calls for tomorrow? Sold calls? Like shorted them or closed them? You're just talking about Monday's contracts? 200%? Plus 200? No, they merged today, Jay. They merged today. 200% is crazy. Yeah, you gotta scale out of those things. Nice, Tasty. Well done, man. Thanks for the support, too. Continued generosity. GNS coming back down to VWAP here maybe. Likes to dance around though. Dude, those calls, man. Patience. Ah. It's just, it wears you down when it just chops. So I was like, just so quick to get out because I don't know if it's still in the chop. I guess took profit on it though, so that's good. I've left a little bit more on the table. $30. I don't like how close we're getting to the end of the day, but the cup maybe formed. Hard to see on the 5-minute with that wick. Kind of see this area. We get some kind of handle. You also have to consider this larger inverse cup and handle. That's curious. Wow. That's kind of negated then. It's past 50%. I mean, I guess you don't have to take the whole wick, but if you did. If you didn't, look at that. If you just took the bodies, that's just the wick from Powell. If you just took the bodies on the hourly here, the 50% is like right at that right shoulder, that left shoulder. I could definitely see that being a pop. Hoping for a little pullback though first. Where is that? 442? Keep losing it. 441. It's the next one up. 441.16. It's not much higher at all. But if we get a nice pullback down to here, that'll be a nice trade. Or just run puts from here because it's getting close to the end of the day. Make me do it again. They merged today, this morning. Oh, Ape is delisted now, and it's just AMC. AMC's all on its own to sell off. You can do it all on its own. I kind of just want the puts, but your handle potentially forming. Potential. We're pretty grim on the show there about HE.
This week, you had a surge in allocations to very short duration treasury bill type ETFs.
Right.
$1 billion about a week ago on one day, and it's very rare to get that kind of shift in a very short amount of time. It suggests that there's some unease, right? And Powell was perhaps the wild card, the NVIDIA earnings were a wild card, and so I like that. That's another ingredient that shows that sentiment is finally cooling off as stocks pause here too.
Well, you had said that last time you were on, that there was an interest in bond ETFs, and I'm not surprised, obviously, because that's been a good trait this year. Tell me about some of the other areas that you're focused on. You had energy.
Right.
Was an area you were focusing on closely, and industrials.
So energy is interesting because there has been $11 billion out of energy ETFs this year. So from a pure contrarian perspective, that's where my antenna goes up. Energy took the first half of the year off. We've seen commodities start to pick up here again, oil back over 80 bucks. And so if you're looking for something that's non-tech, non-AI,
just dilution with more steps.
Energy would be the place to go.
As well as dilution without shareholder
area.
approval.
I think they're also a beneficiary of AI too. Some of those machinery type names are going to gain from the productivity that's offered from this technology, but it's not a pure tech play too. I think that's a great way to play it.
And if someone wants to get involved with ETFs,
here.
I think we need to sort of back up and talk about
Typically get that when we start to get this, the bear market, the sell-offs.
Yeah. So
hope you got your puts for the
top,
next
right? You have
couple
your
months.
vanilla index exposure, your SPY,
Nice little bounce
your VLO,
here.
but you'd like to
maybe
add
I should get some more
thematic or sector tilts on top there, depending on the environment, especially for the S&P 500, right? That's 30% tech. So adding some energy there, which is only about 4% of the index, makes sense to get that
settled
value
cash. Gotta wait.
away from the growthier side as well.
Maybe
And then
there's
Monday. I mean, short duration vehicles
might have a
are
gap down,
5%
though.
right now. Investors are in love with those products.
How do you feel about the market overall?
Couple points doesn't matter on
Look, we heard
January
from
contract,
Powell, the
really.
likelihood of a rate
Not a
hike
whole lot.
increased for the month of November. So we'll probably get that pause in September.
A good
That's
thing.
what people are betting on.
I mean, it's going to happen.
But what are you thinking?
Dilution.
Are you feeling that there could be some rally happening, or
The
just
purpose
at least
of them
even?
creating that ticker was fulfilled with it merging.
It was a very nice move, right? NASDAQ especially, great move up almost 40% year to date.
I don't understand it either. It's insane. Like
following the initial 10 months,
what he did was
non-recession
kind of unprecedented. I don't think.
You do get positive returns, but
I don't know if any CEO has ever
right? I wouldn't expect to be up 25, but
gone around
maybe 12
retail. That's why there's lawsuits. That's why part of the dilution is shareholders getting extra shares because they sued them. And I think that's the settlement. We'll get more shares of this crappy company.
Ideally, this cyclical bull to continue.
Well, there's just normal dilution, and then there's dilution for. I don't know how you're. I don't know how that's working, but that's what it sounds like.
But we've had a higher dollar, which could weigh on multinationals. That's been a recent trend. Bitcoin has pulled back.
Right. So the dollar is interesting for the international perspective. I am very skeptical of emerging markets. I think the benchmark is way too skewed towards China, and that is a volatility trap and nightmare, frankly.
Right.
And if you get a stronger dollar, that could end up hurting places like Europe. And so it almost, in a way, it almost brings you back home to tech in the S&P, right? You're left with that option where those multinational type companies can handle.
Power, we get a push through that high of the day.
All right, Todd Sohn, ETF strategist at Strategic.
I think we still could.
Thank you
we still have a little more room to get up to that shoulder, somewhere around there.
All right, still ahead, we're going to bring in our panel to talk all about consumer sentiment data. We'll be right back.
Thanks, Nicole. They're not the writers and the actors strike. That there's still a lot of movies that are in the can that they're editing and stuff. It's not like right when they go on strike, no more movies come out. Like they have there's a long queue of movies that could last them, I don't know, a year of releases probably. So not like you're most likely not going to notice the effects. And if you do, it's going to be, I don't know, maybe 6 months or so. You're going to see less movies coming out because then they'll be behind. But depends on how long it goes on for, and you probably won't notice anything, honestly. So if I had more trades, I could have traded it both ways, but I'm just trying to do one here. So never know though. cups can always just be double tops. Not sure if we'll have enough time if this will play out. I don't know if we're gonna have enough time. Go Home Depot. Maybe a Bed Bath & Beyond. I don't know if we're gonna have enough time. This freaking guy. He's gonna do one. I watched Dune for a second time, like, I don't know, a month ago. I didn't like it as much second time. I think maybe just because it wasn't as surprising. It was still a good movie, but the first time was like, whoa. And my hopes weren't up for it the first time, really. I was like, eh. And then it just ended up, I was like, wow, it was actually pretty good. But the second time it was like, there wasn't a whole lot that happened in it. I don't know. It's just, it felt like, I mean, the whole movie's like inconclusive. It's basically a to-be-continued movie. Yeah, I didn't like it as much the second time. Kind of a one-shot movie, I think. Alright, you're getting a little bounce there. See if we can build a little shoulder over here. We've got a shoulder, we've got a head. We also have a normal head and shoulder too, so. One screwed up stock at a time is definitely... Yep. You've got things like Radical. I like it. Excuse me. GME 4% there. Buys moving up. Gap fill at all? No, probably not. Not on this rally. It's 1.5 anyways, or 1.15. If you get that gap filled, then this rally's probably over. Kind of see my channels here. I mean, see if it respects this support, this aggressive trend we have here. Minutes to power hour. Let's see if we get that pump in power hour. I want to see 441.16 is not that high from here. Maybe it'll pump past that though. Doesn't have to be perfect on that shoulder. Barbecue. Top 10%. You made 4.25. Guess it'll move back to 50 moving average maybe. Wait around here for a bit. Bye. I might have one more little dig before it rallies, I'm not sure. Thinking it's could rally from here too. I'm building up that right shoulder now. No news on GME. Oh, they did announce their earnings. Or when they'll be, when they'll announce earnings. That's next Wednesday? Or 2 Wednesdays from now? I don't know. It's on the calendar. Think Michael Burry's screwed? Why?
These are new experiences, digital experiences. The more that these new consumers lean into that, NVIDIA has a great runway there. You mentioned Instacart going public beforehand. Same kind of a thing is that some consumers are finding that their time is more valuable than their money in this case. and they're willing to spend. So I anticipate consumer behavior to shift quite dramatically, and the companies and categories that don't are going to end up in the bankruptcy side of the road. Like in 23, we've seen Jenny Craig and Bed Bath & Beyond and Instapot.
Yeah, that's right. A lot of great names there. Thank you both. And look, we've had an exciting...
Apparently, other people don't agree with you because
we had Kava for an IPO.
Barbecue didn't get anything.
Got the breaking news on Instacart. That's sort of tech, gig economy, a little different. So maybe things are looking
all right,
up.
Spy testing.
Ed Batowski,
Hi,
thank
here.
you both. And thank you, friends, for being with me here on Schwab Network, our first week. It's been great. I'll see you next week for that. Again, 11 a.m. and 2 p.m. live from the New York Stock Exchange. I'm Nicole Petalides. Thanks for watching.
Welcome.
Oliver Rennick, Market on Close, next.
All right, let's get that Powell Hour pump. Do it. Oh, shit, let's just coke it. We can double top here. We're gonna break. Do the double top. Do it. Contract. I forget how much slower contracts move than dailies, especially because it's a weekend. They're even slower. And I guess we have. What are these? Oh, it looks like Monday's open. Contracts are for Monday. Monday must be open. Maybe it's a long weekend next weekend. Making a double top here. We'll do it. Major handle. It's beautiful. Lovely. End it. 3 minutes. 4.3. Yes. And today, barbecue pump would be well received.
Good afternoon and welcome to Market on Close on this Friday. I'm Oliver Rennick. We got an hour left in trading. Bulls look like they're about to pull it off here after wavering. They've found their footing and now stocks are rallying into the bell. Pretty nice little bounce back. Still below the highs of the session, but we're getting pretty close there after a swingy response to Jerome Powell's statement at Jackson Hole, which was certainly not as aggressive as it was a year ago, but did start off with the reminder that 2% really means 2%, and that anyone hoping otherwise
There it
needs
is.
to cut it out.
Just need power hour.
So
Push.
it concluded, though,
Give me a sell
also
one to
with
rally.
language from the Fed chair talking about how they need to be cautious and not intently break anything
There you go.
on the way to that inflation target of 2%. So managing to find a middle ground and perhaps kind of straddle the fence a little bit here as stocks are finding a way higher and bonds are calming in the second half of the day. We did get a pretty decent bond sell-off early on and a dollar bounce, but both of those have tamed, and that generally sets the path for stocks to grind a little bit higher. And so we've got it. And overall, it was a pretty good, solid little week in which the selling has been on hold. We've faded rallies and we face planted after NVIDIA yesterday. And that stock is down again today, but the market's shrugging it off. NVIDIA down 2% after ending flat yesterday. Quite a U-turn for the overall chip making group. That being said, we have held important lines on the charts, I think.
There it
Here's
is.
the
Bye.
SMH 3-month ETF look. And the left side shows the previous earnings.
There's new high on the day
from
for SPY.
now 2 quarters ago, back in May.
It's also
so
that
the
right
3-month
shoulder.
chart of the chip makers.
Yeah, you gotta
and
be
as you
very
can
careful
see,
up here now.
the bounce that we got has held. The range has held. Obviously, we got that big
Very
red
careful.
candle yesterday on the right side. It was pretty brutal. That was certainly
That-
a
that
rough
sell wall up
session.
there.
And this is not exactly what the AI bulls are hoping for. They're not really hoping for a sideways trend
Right
in
shoulder,
the
man.
chip makers, of course. They're hoping for
Right on the money,
leadership.
too.
And we don't have that, but we also don't have a major breakdown. So the range for SMH is generally held, and that's good. So stocks led by tech over the last 10 months, still calling that group its leader. Bulls hoping that this will stabilize and turn back around to the upside. So not exactly a big victory for bears, not exactly a big victory for bulls either this week. A little bit of a stalemate, but given the recent trend has been downward off the highs, this is a nice little reprieve over the last couple days as we end net higher for the week, unless there's some big rollover
Okay,
coming here in the
buzzing
next
said
hour.
they're call.
But if it didn't happen earlier, it's probably
That
not
was
going
it.
to
It
happen.
was just that last little pump.
Bears definitely tried to
I mean,
take a
maybe not. I
stab
might
at
keep
it,
going,
swung,
but
missed.
good.
And so here we are, heading with some positivity into the close. A dollar, though, is not giving up the entirety of its gains. Greenback
pick up
here is
some more,
still
SPY
higher.
puts.
And the 2-year yield also up.
January.
And that is a new 1-year high. Important to note that we did get a pretty
Oh, I have an
solid
RSI
move
divergence
for the
there.
2-year.
Yep,
And
RSI
as a
divergence,
result,
nice little
we
short
got a
here.
little curve flattening. So this is now just a 3-week chart, 20 trading days. So I guess about 4 trading weeks. And it shows you the yield curve, 10-year minus the 2s. Up until this week, we were looking at yield curve expansion. So the long end of the Treasury yields have been driving the action. First it was the 30-year, then we got the 10-year to follow, and we were waiting for the 2-year to join in. Shorter along the curve you go, closer to the Fed's control.
Getting this close to the end of the day, you got to be careful.
So the fact that we got the 2-year making its move this week does add a little bit of complications into
January.
the pause, skip, dovish narrative from the past quarter that bulls have been enjoying. Now the narrative is more like a Fed that is truly data dependent, with still the main objective of fighting inflation. And so you get that curve flattening coming down here. What you want is the yield curve steepening the way it's gone, basically.
head and shoulders on the
You don't want
highway.
yield curve steepening by way of cutting the short end because of recession. You want it going
sell all
higher
right on it.
out of growth expectations, moving upwards, which is what we've had. And next week, this is probably going to be one of the most important charts to watch, in addition to the actual just yields themselves, because we've got GDP and a bunch of other numbers. And so the last couple days, seeing the curve come in a bit and undo some of the widening that we've had is a little bit discouraging, because that's what was happening last year when stocks were getting crushed and the Fed was being aggressive, and that was the main driving force of the market. was the curve inverting, even though yields were going higher because the Fed was having to keep that short end jacked up and slamming the brakes on the economy to prevent inflation from spiraling out of control.
Talking about sweet,
so it's not
sweet
a
price
big
action.
Move lower here in the curve
Sweet
this
chart
week,
doing
but it
what it's
is.
supposed to do.
So the 10-year, 2-year dropping back in, as you see, they're off the highs coming into this week. Does speak to a little bit of
double top for you,
repricing
Bubba. Let's
by
just
the market of some
push
more
up to that
hawkish
right
Fed
shoulder.
expectations.
Now you can
Maybe
get your-
not as aggressive as
now
we
you can
got
double
last
down your
year,
puts.
but on the margin, it is an important development this week for sure. By the way, gold for a sec. Sneaky.
Now on Twitter, no
Kinda hanging
confirmation
on for
from
the
Rats, and
ride.
then we go back
I haven't
up.
talked about gold much lately because it's been
Who says that
not
on
really
Twitter?
doing much, but
A lot
actually
of
that's kind of a
volume in there
good
on Rat,
thing.
actually.
And plus we got Peter Schiff coming on in a couple moments, so figured I'd remind you where the chart of gold is because you know he's going to have probably some bullish things to say about gold. And I will say, we've got the higher lows still in the precious metal. It's holding on for the ride right now. And so you can't really complain about that. Let's bring in Kevin Hanks and Renita Young joining me here. And quite a day that we've had. A lot of topsy-turvy kind of action, but ultimately heading into the last hour, we're looking pretty good here, Kev. I mean, NASDAQ's not leading, but it's back up.
Yeah, it's pretty
We've
good.
actually got the
Made up
Dow
some of the
out in
losses this
front.
week.
So, I mean,
Stupid
some
mistakes.
encouragement here for bulls.
You know, Oliver, there's an old trader in me that would beg you not to count your chips while you're sitting at the table. That said, you're right. We're 1 hour away from a good solid finish to the week here. You know, it's interesting. All 11 sectors in the S&P down yesterday, all 11 up today, Oliver, without NVIDIA, without Meta. So a real strong day here for all the major indices. I think what you mentioned about the yield curve goes right to financials having a good day. That sector of the economy having a good finish to the week. But, you know, I thought my perspective on Jerome Powell's comments were they were fairly solidly hawkish. I don't think he minced words.
They sound hawkish
I
to
think
me
he was
too.
very clear. He said, you know, here's some of his quotes. Process has a long way to go. The 2% is and will remain an inflation target. Housing sector showing signs of picking back up, and the economy may not be cooling as expected. That said, this market that may be set up for even worse news took that pretty much in stride and rallied off. A little bit of volatility there right when it came out, but since then, it's been a good, strong, late morning and early afternoon here for the market. A pretty solid end of the weekend. Look at VIX, Oliver. It seems like all the volatility that was building up for this speech is gone really quickly in VIX.
Evaporated. Anything to take from that? Because VIX was down.
Yeah,
actually,
RSI
when
divergence
stocks
still.
were down earlier today,
I
too.
don't
So
think I'm
maybe
buying
that was a
power to
little
take
bit
the
of a heads
puts,
up. We were
but I
gonna
like to
bounce
move back to VWAP.
Well, I think that VIX there's always information in implied volatility. Therefore, there's always information in the VIX. And that is that with NVIDIA's earnings and Jerome Powell's testimony, the two things that we were really waiting for, we came through pretty much unscathed, Oliver. And I think that's what the VIX is reflecting. You know, a year ago, Jerome Powell used words like pain. I think this year, the operative words here is carefully. Right? He's being very carefully. I think here's the good news for the market. I think Jerome Powell wants to be done raising interest rates. Here's the bad news for the market. I think he intends to leave them higher for longer than the market thinks, Oliver. And right there, is probably a net positive for where we are in stocks.
Okay. The don't count your chips while you're at the table. Old trader saying, young poker player superstition as well, too, that I learned from Mr. Ben Lichtenstein. Never count your chips while you're at the table. All right, sometimes it works, sometimes it doesn't. Okay, that being said, the other news that kind of crept in here that I think we need to keep track of, it seems like this is like our Friday conversation, Renita, we've been having for the last couple months, is there's always, by the end of the week, developments on the labor front, and there is, again, with the auto workers. I think we should highlight this story because even if there is not some big event that causes commodity prices to soar, inflation to go in the face of where Jay Powell wants, these types of stories have the potential to really keep a bid under wages.
They do, and we have a heightened environment for workers' rights. The airlines managed to skip a strike, and so did UPS workers, right? But this time, the United Auto Workers Union is looking at the possibility. Now, they authorized the right to strike. They didn't necessarily authorize a strike where 97% of the combined members would possibly strike at 3 of the big automakers. We're talking Ford, GM, and Stellantis.
So it's basically everyone.
It's basically everybody.
97%.
You know, so this gives them the right. The UAW president says that he does not want to strike, but that's one of the options if they don't reach a fair deal with their companies. Now, what do they want? They want, of course, a wage increase. This one, 46%. They also want cost of living increases. They want more PTO to be with their family. They want fewer hours, working hours. They want them to bring the work week down to 32 hours a week from 40 hours a week. And they want to match the salary increases over the executives that they've been having over the past 4 years. Now, I looked at what it would cost the union and what it would cost the company. First, let's talk about some of the costs to the company. Back in 2019, when GM had a 40-day strike, it led to a production loss of 300,000 vehicles. Wow. And the automaker said that it costed about $3.6 billion in earnings, right? But what would it cost the actual union? They have about $825 million in the strike fund. And so it uses the money to pay eligible workers, of course, while they're on strike. They pay them about $500 a week, and that's up from what they used to pay them, right? And so this time it's 150,000 United Auto workers, and it would cost the union about $75 million a week, which would make them tap out of their fund by week 11.
Almost $1 billion in the strike fund. When you start to get to those numbers, it kind of seems like, hey,
we do not comment on rumors or speculation.
Strike eventually. I guess you just keep building it up, maybe. But still, that could potentially fund them for a pretty extensive strike.
It's not from anyone that works for Rite Aid.
Is actually still
the article that's linked.
For all three, in
doesn't
fact,
say it in the article.
Ford and GM turned positive after this news came out. Stellantis is up as well.
Wow. All right. So the market's really showing some optimism
so
on
the
this
things
Friday.
that they just fell
We're
for
bouncing
it.
back. Broad market sold off, bounced back.
Gosh, man.
Autos that sold off initially on this came back and rallied. So is this something that does need to go in the calculus for Jerome Powell, though, just to tie it back to the event of the day real fast, Kev?
Well, I think wages are wages, Oliver. And, when, Renita was talking about the airlines settling their dispute and UPS settling their dispute, those disputes got settled because UPS and the airlines wrote big checks, Oliver. And you saw later the stock sell off in UPS when they realized the overall cost of these. So, yeah, does the overall union battles and fight for higher wages, are they going to affect the overall inflation picture? I think so.
All right. I think so too, frankly. If it happens, even if it doesn't happen, right? I mean, even if they don't strike, they're going to come to some agreement here. I mean, we're basically down to the wire.
It's going to be a big number.
Where they're ready to rock and roll.
Either way.
Yeah, so either way, there's going to be, support for wages in there of some form. So, okay. All right, well, market's shrugging it off. Appreciate it, guys. Thanks, everybody. Young. Kevin Hanks. Okay, let's talk about you and your trading habits. Joe Mazzola.
Oh, yeah, Lagarde is
speaking
right now.
Director of Trading and Education at Charles Schwab with the latest client sentiment report.
European Central Bank.
Joe,
We're likely to experience more shocks
after the
emanating from the supply side
today?
itself.
Stay the way it was? Was it neutral
there's just set rates as high as necessary for inflation.
In their respective biases?
Oh, Oliver, I guess we'll find out when the next report comes out. But look, I think the key takeaway from the report itself is that sentiment
shot
became
to
a
buy
little bit more
GME.
bullish. So 44% of the respondents say they were bullish for the next 3 months.
Might as well just let it go
versus
now.
Q2, where we only saw about 32%. And I think, Oliver, one of the important takeaways from that is how the study was conducted and when it was conducted, right? Basically, we conducted the study between July 6th and August 3rd. If you remember the backdrop during that time, we saw the S&P up 3%, NASDAQ up 4%. We had a QTP number that came in above estimates, and then inflation came in below estimates. So it kind of set up for a little bit of a nice rosy Goldilocks month in July.
BlackBerry close to the highs today.
Rosy optimism from our clients. And a couple other things just to point out.
315.
about 50% of the clients that we polled think that now is a good time to invest. But Oliver, when they talk about investing, this is what I thought was pretty interesting. They're not looking particularly at indexing or ETFs. A lot of our clients, our trader clients, are now specifically looking to be stock pickers. I found that pretty interesting.
And in their stock picking, are they leaning any particular way, finding concentration in certain sectors, themes?
Yeah, absolutely. The majority of them are looking at value stocks right now. And, you know, Oliver, one of the things that I look at particularly is the pure factor returns on Bloomberg when they publish those. And value has been the outperformer for the last month. So clients hit the nail on the head there. In terms of sector analysis and sector biases, I guess, if you will, they're looking at energy. Energy was one of their favorites. Information technology and healthcare. Where are they selling, or where are they a little bit more bearish? That's would be in real estate. And, you know, those are interest rate sensitive products. Interest rates, you know, affect real estate. They also affect utilities. And if you look at some of the laggards over the last couple of weeks, it's really been those two sectors.
Okay. So generally, folks have become more bullish. They've flipped from being a plurality bearish over to a greater percent responding bullish. They're in kind of the more value cyclical camp. So, I mean, I guess that makes sense, right? The economy generally has been better than expected. Employment remains firm. Atlanta Fed says we're going to hit almost a 6% GDP. I mean, I guess it makes sense to kind of buy what you see working around you in the economy.
I would agree with that. And I think that part of it is, you know, we just see rotations. I think last time we talked about this was back in June, and that was kind of the beginning of that real rotation that we saw out of maybe some of the 7 major mega caps, right, and into a little more of a distribution into some of the other sectors. And I think some of the clients saw that, and they were hoping for that breadth. I mean, if you remember, Oliver, coming into August, we were seeing about a 70% breadth in terms of stocks above their 50-day moving average in the S&P 500. So they got that distribution. That's what they were looking for. They got it. Things have turned, right? I mean, we've definitely seen a turn this month. I think we're down around 4.5% in the S&P, and some of that breadth has come in. But this, you know, it'll be interesting to see whether or not trader clients look at this as a buying opportunity, a buy the dip opportunity, or whether or not they fade this. Because one of the things that we had seen kind of coming into these last couple months is our trader clients were using opportunities on rallies in the market to maybe fade some of those stocks that had really outperformed, you know, the 100%, the 200%, the 2 or 3 baggers, right? We talk about those. They were actually fading some of those and then rotating into more of those value names that we had spoken of.
Well, good for them. Sounds like pretty decent timing. Can we take some credit for that now that we're Schwab Network? You know, maybe next survey.
You can, Oliver. And hey, great job this week. I really appreciate all the hard work you guys have done. I'm very happy for you.
Hey, right back at you, Joe. Appreciate that. Thanks a lot. And thanks for jumping on with us Friday to give us the rundown here on what folks are doing. Always like that info. Have a good one. And see you next week. Mr. Mazzola joining us from Charles Schwab. All right, when we come back, Peter Schiff joins in. So if you're easily triggered, then I guess maybe wait. But that means we're going to talk some gold, some Bitcoin, and of course, a little Fed talk after Jerome Powell. Markets are just fine. It's a little recovery.
Yeah. It's probably not a bad hold. I mean, if it holds, GNS holds up any kind of good levels coming into the end of the week, it's usually pretty bullish for next week. even like gap up worthy. So I might even buy it coming into close. Unless you're expecting bad news on it over the weekend. This is a nice short opportunity up here. Let me see. Anywhere I can scrounge together something? It's not gonna be, and that's why buying power I do there. Not loading. Or we rip here, I guess. Fidelity. I gotta get a Fidelity. Not loading it. Maybe I have the direction wrong? I don't know. Might be Fugazi play.
And in the future, and unless we get a handle on government spending, he doesn't have a prayer of bringing inflation back down. And so Powell is afraid to criticize the Biden administration, and so inflation is not going away. Inflation is just going to get worse, and investors have to prepare for that.
Would you say over the last 12 months our spending policies have gone the right way or the wrong way?
No, the wrong way, absolutely. Especially if your goal is to reduce inflation. All they're doing is throwing gasoline on an inflation fire, and Powell doesn't have a chance of putting it out. The rate hikes aren't going to do anything. In fact, all they've really done is add to the rising cost pressures in the economy because interest rates are a cost of production. Companies have to pay interest on their debt the way they pay wages to their workers, or pay for raw materials, or pay rent to their landlords. The way that higher interest rates would help reduce inflation is by reducing demand because of more expensive credit. But credit card debt is at record highs. Americans don't care. They just keep on borrowing. Savings are depleting. We have, savings rate plunging. You have to have an increase in the savings rate. You have to have less borrowing. The government hasn't reduced its borrowing at all in the face of higher interest rates. It's just borrowing more money to pay the bigger deficit. So nothing the Fed is doing is working. And the only reason that we saw a decline in the headline CPI was because investors bid up the dollar because they thought, the Fed rate hikes were dollar bullish.
Before I get started, all eyes on me. I bet you got it twisted. You don't know.
It's fake.
The Fed rate hikes were dollar bullish, but the dollar's topped out. It's rolling over. Once the dollar starts to fall, you're going to unleash a huge boom in commodity prices. Oil will probably lead the way much, much higher. And so you're going to start to see new highs in headline CPI, despite the fact that interest rates are where they are now or potentially even higher.
Okay, got to take a few of those piece by piece there. First of all, the technical description of the dollar can certainly be debated, right? I mean, we just totally unwound the July sell-off in the dollar, trending higher short term. I get your point, we're off from the highs, but we've had a nice bounce back in the dollar while the Fed has actually gone softer on their policy. So like as Powell has gone to this pause, the dollar's been pretty stable.
I disagree that Powell's gone softer. I mean, he keeps saying,
we skipped a couple
long
meetings,
way to
no
go.
hike.
We're going to do whatever it takes. We're going to keep on hiking. We're going to stay higher for longer. Look what's happened to the bond market. The bond market has been decimated because of Powell's tough talk. So you would have expected a bigger rise in the dollar. We didn't get one. We got a rise. But eventually the bottom's going to drop out of the dollar because the dollar should be falling with the bond market. Because the real reason the bond market is going down is because the Fed is losing its fight against inflation. In fact, it's already lost. It just hasn't admitted that yet.
Well, I would say definitely the causality there, relationship of the dollar you've got is right, because if the dollar keeps going up while they do what they're doing, then according to your framework, then something would be broken in your framework, right? You don't have room in your framework for the dollar to go up from here, basically. Is that fair to say?
Well, the dollar is going to go down, not because it's going to be helpful. It's just a consequence of bad policy. But what's going to break the markets isn't the dollar, it's interest rates. But interest rates are going to keep rising until the economy collapses, until the market collapses. I mean, it started to happen already in the banks. We had a number of banks that failed, and then the government came in and backstopped those banks and other banks. And so that was just the tip of the financial crisis iceberg that lies beneath the surface. But as rates get higher and higher, more pressure is going to come to bear on the financial sector and everybody who has debt.
So, Peter, how do we reconcile the banking event that we got, in which, yes, the government obviously
SPY might want to trade it back to the top of this channel. We'll see.
Proceed, but we did lose some banks along the way.
Break this
and a couple of
shoulder.
them were forcibly acquired
Not sure it
by
will
other
yet,
banks.
but
I mean, we got like
we break through that shoulder there.
4 bankruptcies
I'd
and
see a little more
big
rally next
acquisitions.
week.
Since then, credit spreads haven't gone
Find the top
anywhere. So when you say
of
the
this
bond
channel
market's
right
been
here.
decimated, you're just talking about treasuries that have been selling off pretty hard. But the corporate bond market, I mean, is every corporate bond trader asleep at the wheel too?
This won't be a determining
spreads have
factor
gone
today,
nowhere
though.
since the banks got hit.
Not enough time.
Yeah, the markets are asleep. We're at 16-year highs in the yields on treasuries, but they still have a long way to go higher. But the problem isn't that just a few banks failed. The problem is that most of them are going to fail if the Fed keeps fighting inflation. The entire banking system is insolvent thanks to how low interest rates were and how long the Fed kept them there. So you have a house of cards that was created by the Fed, and it's going to collapse. The only way it won't is if the Fed slashes interest rates. It can't just stop raising rates. It has to substantially cut them. And to do that, it needs to resume quantitative easing, really. It has to start buying up a bunch of treasuries, because if they just start cutting rates, bond prices are going to collapse because of an acceleration of inflation, because the dollar is going to tank. But there's no way out of this. I mean, that's what investors have to come to terms with. We are on
I've heard enough Peter
cusp
Schiff.
of a
Inputs.
major economic
Just
financial
I'm getting these days.
crisis
See a little double top
that
there.
will make
That RSI
2008
divergence
look
is
like
still
a
there.
Sunday school picnic.
Got a
Can you
little
give me a
drop for
timeline when you
VWAP
think we
and some
might see
moving
such an
averages.
event, Peter? Like, if I want to bet on this.
Well, I wish I could tell you exactly when, but it's a lot closer than people would think. I mean, we've already kicked the can down the road for a long, long time, longer than I thought we would have been able to get away with it. But in the interim, all of the problems that we've been getting away with have just gotten so much bigger. So when we can't get away with it anymore, when we have to finally, face the music here, it's not pretty.
Okay, but no timeline or when, because I'm looking for a way to find out if we can invalidate the view. A big dollar rally seems like it might invalidate the view. What about like 3-4 more quarters of no bank crisis? Would that be enough, like a year from now?
I mean, time isn't going to invalidate the view. I mean, what I am predicting is pretty much a certainty. So the only
right. Well, the sun's going to burn out too, Peter. I mean, we're all going to die. The sun's going to burn out, and Earth is going to fizzle.
Yeah, well,
eventually.
Yeah, I mean, that's true. You could get hit by a bus, and then you won't live to see the collapse. But if you fulfill your normal life expectancy, this is going to happen sooner than later. Like it's very hard to imagine that we can go through another year or two without a major implosion, because rates are going to keep rising. Interest on the national debt right now is the third highest line item in the budget. It's bigger than national defense right now. It's about $700-800 billion a year.
Yeah, the interest is
By
insane.
the end of the year, we'll be paying $1 trillion a year in interest on the debt. By the end of next year, it'll be closer to $2 trillion, and it's going to keep rising. In a few years, 100% of the government's tax revenues is going to be needed just to pay interest on the national debt. There'll be no money left over for anything else. Now, obviously, somewhere between here and there, we have to implode. It cannot get that big. But that's the trajectory that we're on, because all of this debt, we almost have a $33 trillion national debt. More and more of that debt matures. Every quarter, you got a lot of debt maturing, and that debt was originally taken on at 25 basis points, 50 basis points, and it's maturing at 500 basis points. So, and the deficits on themselves are a couple of $1 trillion a year, and this is before the recession. Could you imagine what the deficits are going to be? The next official recession, we're going to be looking at $3 to $4 trillion a year budget deficits as interest rates are skyrocketing. This is a fiscal time bomb that is going to go off. I don't know how much more time you got, but it can't be that much longer.
Noted. Peter Schiff is not an MMTer. This much we know. Hey, Peter, real fast, I will give you credit that your favorite investment, gold, is hanging on there near multi-year highs, near records. I'm waiting for it to put the nail into Bitcoin's coffin. When does that happen? Can I expect that soon?
Well, again, Bitcoin is another bubble. A lot of air hasn't come out. I mean, gold's not my favorite investment. Gold's my favorite form of money. In fact, gold is the best money. But I make a lot of investments. I own a lot of stocks. Listen, earlier you're talking about value stocks. That's what I own. Most of my money is in value stocks, dividend-paying stocks, stocks that are insensitive to inflation. So I'm overexposed to metals, precious metals, industrial metals. But I have a lot of energy. I have a lot of agriculture, but I have a lot of investments all around the world, real businesses that pay high dividends, that trade at lower PEs, that I think are going to provide a good hedge in this global inflationary environment. It's not just the United States that has unleashed the inflation genie. It's all over the world. The problem is just going to be particularly acute here because the dollar is going to lose its reserve status. I mean, that's obvious. Look at what's going on. And then the dollar is going to collapse. And so inflation in America is going to be much higher than it is in most of the world. And so Americans, are particularly vulnerable. And it's more important that they do something about it, which is why they should, be working with me at Europe Pacific Asset Management. I'm building these portfolios that I'm confident are going to withstand the crisis that's coming.
All right, well, I hope you're not too short the dollar in there, because it's holding on for the ride at 104 right now after the slide from the top, and well above where it was when we first started talking a couple years ago in the middle of the COVID situation. Peter, always enjoy the conversation. Thanks for being here.
No problem. Thanks for having me on.
Likewise.
Have a good weekend, guys.
You too. Peter Schiff.
Coffee gave him a little gut shot there at the end.
All right.
It's been when we were talking about this years ago.
In the portfolio. And expressing a lot of energy himself. I love talking to Peter, especially on Friday into the weekend. Tom's up next with some options trades. He's got a couple bearish trades. One in a bank, maybe in honor of Mr. Schiff's view there at extremely.
I just taking forever. GNS back down to VWAP there. Tested 131. Barbecue, this is the way, up 2.5. New high on the day. Do it. Who knew barbecue was the safer investment than rad?
Small business loans probably drying up a little bit in this type of environment with the higher interest rates. So yeah, some headwinds here. It's been pretty choppy, down about 10% so far this month. So it's been under some pressure, and I think somebody's setting up for some more downside in here. This was out in the Nove cycle. So you're giving yourself plenty of time to expiration for this trader, about 84 days, where a trader bought the 42.5 strike put and then sold the 35 strike put about 5,000 times. So buying this bearish put vertical to the downside. They paid a debit of about 240 on that. So that break even just above $40 is about 3% below the current share price in there. So yeah, somebody taking a bearish stance here in Wells Fargo over the next several months, thinking that we're going to see some continued weakness in this name.
GNS off of VWAP. Staying up in that channel. Look at that.
For the stock, I mean, straight down, 4 weeks in a row.
Yeah.
So, I mean, I guess I can get the sentiment going into earnings.
Finally time to short the banks?
It has been pretty choppy. So, the break even of what, $40?
Yeah, just above $40, $40.10.
Wow, Wells Fargo
that
has
doesn't seem like too
was
long of a shot. I mean, we're at 41.25 right now.
3% lower is that break
Fully
even.
recovered.
So yeah, this trader, and I think the key on this type of trade that this person's doing is that they're giving themselves time. 84 days till expiration. You're going to capture another earnings event. So you got plenty of duration on this
January
one to get this thing to
5 strike
to move down 3%. That could be a one-day move.
I like that.
How about HPE, which does have earnings next week as well? Yeah. Someone fading this. It's been all right. It's you know, hanging out near the highs of the past year, but it did slip. Just
these trades after I'm out of buying power with my
it's only up
small
about 4%
trading account
this year,
have been
so,
much better.
You know, lagging severely the NASDAQ 100. A lot of other names in this space. You have to wonder. They expanded their relationship with AWS to simplify how enterprises develop and manage applications and workflows across their GreenLake and AWS. Segments of their business. So that was a positive. But then on the other side, momentum in networking edge segment and artificial intelligence initiatives might not be enough to offset weaknesses that they've seen in core server and storage segments. So they've got, you know, kind of battling segments of their business that are doing well and some that aren't doing well. So earnings next Wednesday on the 29th. So that'll be a key event. But I think somebody taking a bearish stance here. They gave themselves duration on this one, Oliver. So they're giving themselves until the December monthly series. So that's about 112 days till expiration. They bought 19,000 of the 13 strike puts for only a 25-cent debit here. So that break even $12.75 over the next 112 days. That's 24% below the current share price in there. So this is somebody that thinks, hey, into the end of the year, HPE is going to fall below $13. Yeah, get wrecked.
Not even getting cost basis on Fidelity.
This is a different trade than the one for Wells Fargo, which was just kind of like a slippage trade.
Yeah.
This is a crash trade for HPE. Yikes. All
right, well, popping up.
They're going to have to do a lot of AI talk, I guess, to keep the stock going. Pretty volatile around the last year. I mean, some pretty big swings up and down.
Yeah.
How about Boeing, which didn't have a great week, showed some imperfections still in their supply chain and some poor execution that kind of seemed partly on them.
Playing Fugazi,
Spirit Aerosystems a little bit.
Yeah, but look at the $10 flip around in the stock today. Based on the fact that there was a report out that they're going to start delivering again 737 Maxes to China.
I know I am, but
that's been a 4-year pause for them. That's one of their their strongholds as far as growth goes. It gave China actually a little bit of catch-up time because they've got a couple of builders over there now creating planes that basically fly within China, playing catch-up there. But this is a big deal.
First time in 4 years.
I'm having to keep count of how many I want to make sure I was short one of these.
Traded $212 earlier in the session. So, if you look at it, up 16% this year. Earlier in the week, you mentioned more issues with some of the safety concerns, the SPR, Spirit Aerosystems segment, as one of their contractors. They got to do some more testing on some of those planes. But this is a positive note, and that's why you saw a bunch of call buying in their call volume about 3 times normal daily average volume, because we saw a big pop in the shares, so everybody's scrambling for calls on that news. But they bought in the September monthly cycle, so 3 weeks till expiration. They bought about
Unsecured
4,500 of the 225
Unsecured.
strike
They
calls
could
for an
put.
average debit of about
Or put.
$4. So that break even 229 over the next 3 weeks. That's only about
I don't know
3%
how
above
many
the current
contracts
share
they have.
price. So somebody thinks that we're going to see continued rebound in here, and it's not a bad way to start it when you got one of the most populous countries in the world that's fully reopened.
I have one left.
Maybe taking delivery of some of your planes.
All right. So someone likes the story, buying some upside. And we got a bullish trade in the mix. So 2 bearish ones, a deeply bearish trade for HPE ahead of next week, and one on Boeing, which is having a nice session here, up 2.25%. So it's not going to be up on the week, but it is recovering some of that lost ground from the Spirit
back in
Aerosystems
131. Wow.
production line. So
On that wick,
thanks,
huh?
Tom.
Yep.
Nice finds here. When we come back, we'll get the developing story on the latest potential bankruptcy.
Right on that support.
That's
I guess
in
it
Rite
did
Aid.
literally bounce right on our line there. That's
Ouch.
crazy. All right, I'm selling this last one. That Fugazi might be in our favor, but might be also. I want to wait for the test at this level. I wouldn't have kept selling them, but the fact that it wasn't showing my cost basis or even that the contract's going down just makes me nervous. One step away from having to call into trade. Hey! Hey, will you sell this? I think I made money. I don't really know. Alright, I'm out of that last one. Little profits on all those. Could see a VWAP move. We'll see. 15 minutes to go here. Make a nice little head and shoulders there. 15 minutes to go. MACD flip bearish, but it did find support also, so at your own risk. I'm into Fugazi.
Its shares are down 50% into the close here.
Right.
Now, they said this Chapter 11 filing would cover more than $3.3 billion worth of their debt load and pending legal allegations that they did oversupply some of these prescription painkillers. Now, they haven't agreed on a settlement with federal, state, or these private opioid plaintiffs to resolve some of the liabilities they are facing in this Chapter 11 filing. They are planning at this point, according to the report, to treat them as general unsecured claims. But we do know they're facing now thousands of federal lawsuits that are being consolidated into a multi-district litigation in Ohio, as well as they're facing a significant number of similar cases in state courts that allege that they were also contributing to this opioid pandemic. Just from looking at names like Purdue Pharma, again, this is not a headline you want to be affiliated with at all. They also are seeing this bankruptcy filing as a way to then put them back on a path to sort of shore up some of their debt load, shore up their overall balance sheet, but we're still obviously waiting and seeing how this shapes up here. Now, we do know this is a company that even outside of these headlines that we've gotten over the past several days, that from 2015 to 2018, they tried to unsuccessfully merge with Walgreens Boots Alliance. They've also seen efforts to now improve their capital position that have somewhat failed. The company's cash has also dwindled as of late, so we did see their revenue decline around 6% in the past quarter, and we also did see their net losses nearly triple in the most recently reported quarter. So they have issues even outside of this, but again, anytime I see the words opioid epidemic and names like Purdue Pharma as well as a few others, as a company, you want to steer so far away from that.
Yeah, and so I guess that's why CVS isn't having some move in sympathy. This is not like a retail statement. This is very specifically tied to the opioid lawsuits. In fact, CVS is actually up a little bit today, possibly related, maybe not. But actually, that's not our only developing story. We've got something a little bit more positive, I suppose. I'm not sure. Hostess?
I'm not sure if it's more positive either, because I was just reading.
Everything's better than opioids.
But it is. This is definitely a food that makes everyone happy. But Hostess has also filed for bankruptcy twice just in the last 2 decades. So they also have their own share of balance sheet reworking they need to undergo here. Now, we did see shares surge today, so at least we're seeing some positive price activity, 21% into the close. They were actually up as much as 30% to an intraday high, just around $29. That puts them on pace for their best day, by almost double. Their best day prior to this was a 15% gain back in March of 2018.
Love it.
So 21%, we're still pacing to close out a really nice session here after we did get reports that this company was considering a potential sale to interested parties. Some of these interested parties, according to Reuters, are General Mills, Mondelez, PepsiCo, and Hershey that are interested in Hostess, which they did hire now Morgan Stanley as an advisor. So the Reuters did say there are sources
$3.5 billion in debt
they will
on
not
Rite Aid?
disclose more.
Dude.
This is, again, another company that has seen some weaker sales. This is
$22 billion
also
a year.
company that was established back in 1930. So they have weathered a lot of storms, but have seen some weakness into
How poorly can you run a
today's
company?
Nice move higher. They were
and
actually down
that-
1% on the year.
I know it's
so
the lawsuits,
now we're
but
up
still,
20%, obviously making
the
a
heck?
monster move, but still another wait and see story because
I might try and
they
grab
are,
Brad as
obviously exploring a potential
I don't know if
sale
it goes OTC
because
or whatever,
they need to be
like-
sold. I mean, they're seeing debt levels increase and they're not seeing growth that it's been able to excite investors at all, frankly.
I see potential more for Rad
Interesting.
with a restructuring than barbecue.
At least one to the upside, so we're kind of breaking even here, right? Down big.
I didn't know.
Hostess maybe looking for a
Twinkie.
sale. All right. Everyone loves a Twinkie. Thanks, Jenny Horn. Appreciate it. Let's
I'm
go
gonna
to
give it
Dan
tons of
Danning,
time.
managing partner at KKM Financial. Stocks having a nice little rally here. We're hanging on
Definitely
into
could
the
have some
close.
trades, though, coming
Dan,
up
why
on
the
it.
turnaround from earlier?
You know, Oliver, that's a good question. Just maybe the oversold conditions that the markets have experienced throughout the month of August. I think that's one of the driving factors.
12 minutes.
I mean, the market looked like it wanted to go up, a couple of days ago. The big reversal yesterday, very disappointing. And then the fact that it gave up a lot of that initially this morning. You still had
Dude, my
some
account
selling,
swings
but
a
once
lot
it dried
now that
up,
it's like heavily in
maybe
SPY
thin
puts.
markets as well. I mean, honestly,
My
we looked at the
long-term.
volumes. I was on the
I
floor
used
of
to
the
see it
CBOE
swing.
today, and you're just not seeing a lot of option volume as we
Crazy.
roll into the long weekend next week. And so I think that's a confluence of things here, Oliver. But if we can hold here, which it looks like we're going to, this will at least break the 3-week losing pattern in the equity markets.
Yeah, that's worth something, to be able to stop the bleeding, I guess. Nothing too magnanimous in the bull camp, for a turnaround, but it'll do, to stop selling. Doing it while the dollar's been firm and bonds selling off, but not much.
Got like
Kind
over
of,
half my account.
Softened up a little bit on
Buy
those
puts.
two moves as well, so I guess that
It's
helps
become
after Powell.
more than a hedge at this
Yeah,
point.
I think so. Although the dollar is challenging those May highs now, and we did see quite a move today.
Hold on, find a
So
Twinkie.
that's something
Thanks,
that's
Shaven
a
the Bay. Have a
little
good week,
bit of a
buddy.
headwind,
Or a good
I
weekend.
think,
Thanks for your
has been
support
and
this
will
week.
continue to be if we continue to
Comes
see
this by.
further
If we
upside
guys,
in the
let's see what
dollar,
we get.
particularly if we take out those May levels, which we're teetering at right now as far as reversing some of
There it
the
is.
downside that
There it
the dollar
is.
has realized over the last couple of months. So that next week, I think it's going to be a key driver. Powell indicated that the potential for further rate hikes. Interesting that even after the
Take a little
speech,
profits there.
there's still 80% chance that they hold in September, but now you're looking at a 60% chance of a hike, at least quarter point in November. So you're seeing a shifting dynamic there. And the yield curve inversion is starting to stretch back out after narrowing to its narrowest point in 2.5 months. We're starting to see that push back towards 80 basis points between the 2-year and the 10-year. So, some of the markets are adjusting for the themes that were reiterated once again this week, plus the data. But the one thing that's different this week is, at least to this point, the stemming of the equity selling pressure.
Indeed, I like that. Stemming of the equity selling pressure. Perfect description of this week. Thanks, Dan Deming, managing partner at KKM Financial. All right, let's broaden out the conversation to include the rest of the world. For our Big Picture Schwab panel, Colin Martin and Michelle Gibley join me. Colin's a fixed income strategist, and Michelle is a director of international research. So, Michelle, we've been talking so much Jerome today, but maybe we should talk a little Christine Lagarde as well. What did we get from the ECB chief?
Yeah, she's actually just finishing up her speech at Jackson Hole. She hasn't said much new, but she reiterated that rates need to be restrictive for long enough to get to inflation back to 2%. And next week, we'll get a CPI reading out of the Eurozone. It's the last one before the mid-September meeting for the ECB. The consensus is that both core and headline inflation ease on a year-over-year basis, and the market is expecting that the ECB will pause in September for the first time. But it does sound like there might be some disagreement on the board. Some of them still want to hike, but reasons to pause would be that inflation has cooled, and really there are some signs of economic weakness. The PMI reading this week came in at 47 for August, and that was led by weakness in services, which fell below 50 for the first time since December.
Yeah, that number kind of seemed like it went a little overlooked this week, but was probably the cause of at least the short-term kind of movement we got in bonds that day those numbers came out. We had a little bit of a rally back in treasuries. How big of a deal was that slipping below 50? Because I know some of those numbers were already below that level in contraction. Were they not, Michelle?
Well, you know, the services going below 50, like I said, it was the first time since December, but services has been weakening in recent months, and that's not just in the Eurozone, that is across the globe.
So, Colin, how do we kind of take away the net movement for bonds this week? We had a couple rallies, we had a couple sell-offs. It seems like the 2-year breaking through to a fresh high is maybe the big move of the week. What do you think?
Yeah, it looks like the 2-year was kind of the big winner in terms of where we saw the most movement.
We move further down to VWAP,
the 10-year
or
Treasury
438, the high back here.
New high since 2007.
GNS holding up well on that channel.
The yields have ping-ponged a little bit. I think a lot of market participants were really just waiting for the Jackson Hole speeches to get a better understanding of where Fed policy might go over the next few months and few quarters. Now, if you look at the initial reaction today, this is kind of similar to what we see a lot, where the minute we see an economic release or a Fed speech, you tend to see yields kind of go all over the place, and then we get more of an understanding, a digestion of what's being told, what's the story that's being told. What we heard from Powell was really not much of a surprise. He basically explained his resolution and resolute status to bring inflation down. He highlighted that things are moving in the right direction. Inflation has been trending lower, but he made it clear that the job is not done just yet. And I think what's important, when we really saw yields start to move higher, pretty much all across the curve, but especially with the 2-year, where we saw that new high getting over 5.08%, was how he concluded his
nice
speech,
head and shoulders there, guys.
That we're going to make sure we get the job done here. And if you look at the labor market and economic growth, he hinted that while it's moving in the right direction, if it comes in stronger than expected, more tightening might be warranted. So for now, it doesn't look like he's itching to go higher, but he's letting us know that they will raise rates if need be.
Now, that kind of in between, is that obviously bond bearish or bullish in your mind, or is Powell threading the needle, the market equivalent of like a sideways trend, or is him not hitting the brake as hard? Does that kind of lead us to a default path of growth? I mean, I guess that's kind of a neutral rates debate to some degree.
Yeah, that's the $1 million question, Oliver. If he was more resolute in hiking rates aggressively to really bring down inflation and slow growth, that would probably be a bond bullish call. Bullish meaning that would pull yields lower and prices higher. But with the path they're taking right now, and as he acknowledged, they're trying to figure out what the neutral rate is, with things going pretty well right now, and if the Fed can either stay at its peak, if we're there now, or hike one more time and hold there, and with the expectation that there is a soft landing. Again, that's not our base case, but if that were to happen, that could be
they were talking about RAD. I don't know if they're getting... Sounds like they had more reports It wasn't just speculation or rumor from Wall Street Journal. Didn't it seem like Jenny had specifics? That it is legit and it's not just rumor? All those lawsuits pushed it into BK. Now you've done it. Should have filed it when Rite Aid was squeezing. They could offer shares and pay you outright. Bring up the old bankruptcy court. Pennies on the dollar. I don't know if... I don't think Rite Aid said anything specific yet. What I hate about this, it just moves on people familiar with the matter. Today's bittersweet, kitty, but overall doing swell. So I added to SPY Jan puts today, and I don't know. AMC's gonna bounce all down 13. I don't know. What did I do? Traded SPY. That was fun. Green on the day. That recouped one of the losses this week. Still down on the week, unfortunately, but did 18% on the count. Yeah, kind of just went with what helped today was my entry on the put was pretty nice and high. That made a nice start to the day, made it much easier to hold through all this. Sold some, bounced, I reloaded some right in here. Sold out of most of it here. Some more here. Actually got into calls somewhere around here. Traded those, and I'm down the day from where I was here. Because then we just got into the chop middle of the day, so I'm gonna have to think about that more. Definitely gotta be very careful from like 11:30 to like 2 o'clock. This is so common. But caught the call from here, from VWAP to the high, and unfortunately closed him. Missed this move. Caught this little cup handle right here. Got the long right here. Traded that up to here, and then closed. Yeah, no. Straight up to here, closed, and then actually opened up a short up here. That worked out well. Closed that here though. I didn't hold that long. Barbecue up. Oh, it's flat. Oh, that's the bell. Ding ding ding. Hope I didn't have any options expiring I didn't know about. Barbecue's flying the day. It's looking good though. Still in that uptrend. Still like it. Inverse head and shoulders on here on the hourly. Of course, there's levels it needs to stay above and levels it needs to break to be bullish. So far, it's building up liquidity on this right shoulder, on this head and shoulders, in a longer time frame. So the way that looks is bad. However, with the fact that it did bounce here, it's a good first start of a turning around and not flushing through. So like to see it hold this support or this horizontal 1875. If we break this last resistance, but really that's not even that necessary because that's one I just put in there. This is the resistance I want to break, and we're now trading to the right of it, so that's perfect. We're above it. So I think we should see some ups next week. Barbecue. Hopeful. If it starts to come down and break like 18 cents, I'll probably be closing out of that. GNS, nice mover today, 27%. Had the rally just straight out of the gate this morning, but we've been kind of waiting for it as it's been consolidating over the support on this inverse head and shoulders, and this was a 50% retrace. I don't know, I deleted it. Yeah, all looks good. Got a pretty steep uptrend it's in right now. Did it close at the high of the day? Wow. So bull flag there actually closed out today, not at the high, fortunately. But now we're at the next resistance, 145. So let's see what this one has for next week. As you see there, now we've actually made a cup on it. So could do a little pullback here, potentially. Maybe at this shoulder. And if we find support and start to go, then up handle, bon voyage. If not, and we build a shoulder and come break that level, and looking like head and shoulders here, and this was just a double top. Yeah, so 131, I look for an entry. However, next week, I mean, we could have a gap up and just already breaking here. It doesn't have to make a handle. And a nice uptrend. We got the dividend date on the 31st. I guess I would just look for this high back here for more profits, more resistance, profit taking area. If that breaks, $2. Yeah, I'd put $2 on it. And GME, a little bounce today with the market of sorts. GME was a little overextended to the downside, so look for it to kind of bounce up a little bit and probably just consolidate here for a little bit, consolidate into this resistance, see if it starts flushing on that. I think the market will probably do something similar, but I'm bearish on it. So GME could start coming down pretty soon next week too, I would imagine. And then they have earnings on Wednesday after next. So no idea what that's going to give. I think we will at least tested this low by that time. TUP, we didn't even watch TUP today. TUP's holding that right shoulder too. I'm more bearish on TUP than GNS, but it is holding this right shoulder so far, this right inverse shoulder. However, it just looks like a bounce falls on a downtrend, especially after GNS's pump today. That's looking nice. And Brad, rumors of bankruptcy, down 51%. All-time lows. AMC had their convergence or whatever with the ape. So no more ape. Down 13%. Reverse split is done. And yeah. Hope you guys had a good week. Thank you so much for the support. See you on Discord. See you on Twitter. Thanks, Kitty. Thanks, Christopher. Thanks, Jay and Taryn. Thanks, Poison. Thank you, Tasty, for your trading fees and your support. And Guts. Pizza party. You go order that. Order that pie. Go half pepperoni, half pumpkin. We'll see you guys on Monday, if not this weekend. Thank you so much for your time. Take it easy. Chill. Have a splendid weekend to you too. Psych you up. Okay. It's out.